Alrighty, let's do this thing. $4.52. All right, I think we might do some more base charting today. Hey, good morning. Still morning here where I am, anyways. I'm probably not morning everywhere. On the East Coast, it's already noon. Sure, there's a lot of folks that are struggling right now. I got folks out east who got hit by that hurricane. There's a lot of people without power on the East Coast. Rough time for sure. I got some entire towns that got wiped out. It's places that on the East Coast that just don't normally get hurricane like tropical storm like stuff. They're just too far inland. They got hit really bad. They're just not always prepared for that kind of stuff when your weather's changing a lot. It's like what happened in Texas a few years ago. Super strong cold snap. Like sub-zero temperatures all of a sudden. And the grid went out. And they're dealing with a lot of stuff, a lot of power outages, water outages in North Carolina. So it's rough. I'm not saying like it's any easier when hurricanes hit places like Florida, but they're generally more prepared, so they tend to not get kind of destroyed as much. Maybe not in the way that some places are. Yeah. Anyways, so kind of came on late today. Was hanging out with my kiddo. We're playing the new Zelda game. It's really good. It's kind of hard. It's different. We were hanging out this morning doing that, and then I was kind of watching the stock price, and when we left it on Friday, and oh, it's really good. Yeah, it's really good. It's different. I mean, I'm sure you're aware of that if you're a fan of the franchise. It is very different. It's different in a way that I'm happy to say it works really well, but it's not. It's like it kind of flips the script on, which is cool. Kind of flips the script on the genre to some degree. Or like the series is so long standing. There's been like 18 or 19 entries in it, and it's just kind of fun. Basically, you end up using objects and bad guys to do all your dirty work for you instead of just a normal set of equipment and shields. There are a couple times when that kind of doesn't work out, but it can be very challenging. Some of the puzzles are pretty darn hard to figure out, but yeah, it's good. We left on Friday. Yeah, when we left on Friday, that whole day was kind of a crappy day. So I know it seems a little odd because on Friday it was sort of a mixed bag, but it went really high. I think in the end went up to 466. And to me, without having any further analysis on it, if I saw something like that and I was like, oh, it made a floor and then it broke beneath it and it punched above it, my immediate thought is it probably went a little bit too high. It's not impossible though that we get kind of a double upthrust here and then come back low for like a spring, and that the range is just building out higher maybe than normal. The daily looked like an inverted hammer almost on Friday. RSI on Friday looked like it was climbing, but it never quite reached, as you can see, going back to Wednesday on the daily, it never quite reached oversold. Now, that might stand in contrast to some of the things that we said before, because sometimes during the day it might get oversold, right? And you might see something like that on RSI, and then it flips by the end of the day. And so there are certainly times where you'll see something like that happen, and you'll say, oh, it's oversold, and then you come back later and you're looking at it and you're like, well, it never really got there. Well, that's because probably it came back up by the end of the day. A number of things like that can alter that. I believe on 4 hour was the big one. We talked about the 4 hour being pretty much as oversold as it's been for a long time, since like April. So if you were following AMC last week, we were going through it, we mentioned that this RSI here on the 4 hour was really, really low, and it hadn't been this low since April, which of course leads into the May run-up. Doesn't mean that it has to happen again. Doesn't mean it couldn't go lower. Just means that right now it's the lowest it's been in a long time. I mean, you got April, May, June, July, August, September. We're basically almost in October now. So at least 5 months, 5.5 months. And that's a struggle, when you're watching the chart to see it go low and know that that could be a potentially huge move, but we haven't really needed that kind of a move. So it's a debatable point, It's one of those things where I always think about like kind of correlation and causation. There are some reasons to suspect that being that low, being oversold, would cause you to go up. But the RSI is not it doesn't indicate something that has to happen. And like when you look back at, let's just say April 1st, it actually got really oversold on this first drop through 350. And it remained extremely oversold all the way down to like 250. So it climbed basically an entire dollar distance. This whole distance here traveled is all, all of this is during a very, very oversold period. And you can see this is kind of the MO. And this is sort of the way it's been. Like it did the same thing back here in January. It was like January 4th. Yeah, through the 16th. Yeah, you can see here to here. I mean, it was very over. And then there's divergence, but the price is still going down. I mean, and it makes it easy enough to sort of trade it, at least to trade this breakout move. And maybe the same would have applied here to trade this move up. So these reactive moves here, certainly you could use RSI to. And I'm a big fan of it. I just think it's a very simple indicator. To help understand the strength. And it's usually echoed by MACD. MACD is a little bit different because you're looking at maybe the way you interpret it is different because it's crossing zero, and so it's charted differently. We could get into like the formulas and what they're calculating, but to me, like they usually move in sync. So if there's a divergence on one, there might be a divergence on the other, vice versa, and that's just kind of the way that I would look at them. So I do look at both, but they're probably the most commonly used indicators in the market. So that's why I like to pick on both of those. I used to use them almost exclusively. I use them with like a VWAP to do like a 1, 2, 3. And it's a good way to trade if you do swing trading, is to pick out maybe some criteria for like how it's going to potentially break out of a trend, and then use the VWAP, and you can use certain time frame setups, the VWAP, the RSI, and the MACD. And one of my goals long term has been to kind of get out of some of these more crazy volatile meme stocks and get into more regular, easier to trade, I should say, channel bound stocks, so that I can do some of that more basic trading pattern analysis. Because frankly, even though you may not make as big bucks, on 5 to 6% swing trades, if you're doing it consistently and it's consistent, then it's just steady income. The hard part about being a smaller account trader is just not having the capital to do that and frankly make it worthwhile. So I'm gonna kind of put a bit of dog ear on that for now and just kind of focus on what we're focusing on. But that is one of my longer term goals. I think is to get back to, I don't want to say it's basic, but it feels more steady. And I liked doing that when I did it. It was a lot more, I felt a lot more rewarded and like for just having like a consistency. Whereas a lot of the stuff we're doing with these crazy meme stocks tends to be a lot more high volatility, big swings that we're trying to like anticipate major breakouts, like range wide breakouts, and not really trading the range very much. So it's kind of a different trading pattern, or trading plan, I should say. Anyways, so on Friday, we had this big daily candle that had this kind of nasty wick to the upside, which made it look a little more like a hammer. I think it wicked a bit too high, which is not a good thing. Like I didn't really want it to break higher than like 460s. I think I even said like 457 would be nice, just not breach too far. In the grand scheme of things, I think this is a debatable point because I've talked to a long time ago when we broke out in March. I remember Stockbyler and I had a conversation about why he said he thought it came too high. And it's complicated. It's like, it's not always the more obvious thing, but usually it's that auto reaction. You don't want it to come significantly back into the previous range. I think we did here. I think coming back above 464 was a test. The reason that that's important is because, like anything in the market, that typically would signify distribution. If you're kind of pushing prematurely in the range, you don't really have enough strength to go there. That's really more a sign that there's an operator who's covering their shorts and they're just trying to push it as high as they can to re-enter. They're not really respecting the range. The only real kind of debate that I'm having with myself right now is whether or not we count that if it's like a diamond, for example. There really wasn't a push into that liquid center. It did go back really close to it. You can see it's like 467 right here, and that's went up to 466 just barely. So 465. So I'm kind of like, part of me is a little bit nervous that we came too high, and part of me is like, man, don't worry about it. You know, it's going to do what it does, and if it came too high, we'll find out soon enough. And that's probably where I'm going to leave it for now. Because I think this drop-off point right here at 466 might be more important than the little floor that was created at 463. And then looking backwards, it makes me feel like that's correct because back on September 6th and thereabouts, it was like 466. And we hit right here 465. So does that make sense? You guys are like, probably not. It's too much for intro to this stream, Booksy. So anywho, one of my charts basically looked like, I mean, I don't even know. It kind of looked like what happened here on RSI, but like smaller. It's odd because it did do the same thing. If you look at the RSI down here, you'll see what I'm talking about. I'm about to demonstrate it, so don't get too worried if you're like a little lost. I'm kind of chit-chatting here and not really like establishing myself very well. This move right here is pretty classic, like distribution style move, but it should remind you of what happened in 2020 because that's a very common bottoming pattern that AMC has, that little M shape coming across a creek, and it did it very consistently. Like I had this line on the chart a while back. We talked about these crosses here. I think I had two more. One was right here, and I think the other was here. And we use these as kind of ways of understanding like the way that the waves are kind of breaking through here. Well, anytime you have one of those cross-ups, there's always the potential, you can see it here on RSI, that this could go all the way back to the top. You'll know if I get rid of kind of the noise that I just drew, that there's quite a large amount of space here. You know, if we were to react to the upside just straight up, you should be able to get all the way back to overbought territory in theory. Okay. Now this is a 2 hour, and I was looking at it on the 4 hour a minute ago. What would that mean in terms of price action? Well, here's where things get a little bit dicey because it's actually asynchronous. It does not have to be one-to-one, and you're kind of able to see that visually here. There's a clear spot on RSI where it seems to break down, right? And you'll note that that's right here on the 16th, the Monday. That's over on like the natural looking kind of foretop, 1, 2, 3, 4 here that we got, right? Okay, that's fine, right? No big deal. You identify that's the drop point, so what? Well, notice that on the RSI, if you were to draw that line up here, it seems to follow pretty well. This looks like a sign of weakness maybe right here, but then that's not the case on the trend. Like the actual trend itself doesn't do that. So if you go from the same bottom on the 28th, right here, there's no real trend to speak of. It's basically like a parallel. And I think we talked about these before. I had a series of parallels drawn up. So you can see like there's a little bit of a disconnect with the way we're understanding the waves in RSI with the way that we can see them on price action. So how do you reconcile that disconnect? Well, in some ways, the RSI already kind of did it for us. When it came back up, you can see it's double topped here. And I think what's being respected is this second bottom on RSI, and that's the more accurate bottom on price action. So it sort of already did it for us in that regard. Now, this is where things, again, can get kind of dicey because you might look at this and say, well, if the RSI is going to push up here and break to the top, shouldn't it mean that it goes higher than 511? But that's not, again, that's not really how RSI works. It could become overbought way more quickly, right? But way before it gets to the 512. So on the one hand, yeah, I've got on my chart, it looks like it would just come right back up to the top and go. But that's only if it's like somehow perfectly one-to-one, right? And it goes up and hits this mark. The other thing to consider is that it's already kind of hit that resistance. So at this point, it's already kind of bonked its head on this. Maybe we get that inverted head and shoulder, maybe not. Right here. But it's not really the best indicator maybe to whether or not we could continue. So it's going to be a bit tricky going forward. So one thing that I like to do every now and then, and it's a little bit bizarre, and I don't think it always works, so bear with me, is I'll actually mark off where I marked off on the RSI, and then I'll mark off here where I think it was. So this was around Friday into Monday. It's like really close to the end of the day Friday, so basically the very end of the day on Friday. We're going to look at that and see where we can see it, and that's right here. So this is kind of the more accurate maybe marker for RSI. Notice that doesn't really match up. It just doesn't really match up with the trend as it did exist before, but it does match up with that one hook. Okay. So in all of this, it's like easy to kind of look at this and suggest that, well, it's probably going to go way high then if it breaks out, right? It's going to keep going. Not really the best way to do it though, because again, this could become overbought pretty quickly, and then we can go up to a higher time frame and try it again and see what that looks like on a higher time frame. And I think it's basically the exact same thing. But notice that here, when we draw it out, this hasn't even reached the top yet. So there's no rejection there yet. The same markers, but no hit. So it might be suffice to say, I would argue that on the 2 hour, by the time on the 4 hour this is up at the 50, if you were to get there, that probably on the 2 hour it's going to be more than likely already overbought. Like it's going to be on its way up higher. You know, something like that. Okay. That's assuming that you got an upward move. All right. So, short term, what that means is we're more prone to get overbought more quickly, I think, based on the way this is charted. And so I think there's a sort of this is where things become very interpretation heavy with RSI. There's sort of this is where your opinion comes into it a lot. Do I think that this necessarily breaches and just takes off? Well, I guess the short answer is no. Like, I don't necessarily think that's what happens. And then you have to kind of look at the big picture, and it's like, yeah. So what I'm seeing is that there's a short-term working out that may need to happen up and down. So on the lower time frames, we may get overbought pretty quick and then get oversold pretty quick. I think on the higher time frames, we're kind of waiting to see if this is really turned up. There's a higher trend here on this four top, 1, 2, 3, 4. And that is obviously more apparent to us, visually speaking. That's another thing to consider is like, yeah, we haven't even jumped that yet. So if I'm doing all of this analysis, right, there has to be a point to it. And my point would just be to say, okay, while the price action itself may not be overly channel bound, and I don't think it really is. I mean, there is a bit of a channel here in terms of the direction. There's definitely a steady direction. I think the RSI is heavily channel bound. And I think that unfortunately to me means that any kind of like big reaction that we have, this is probably going to be a good place for you to vet whether or not it's actually like breaking out. And it can be a bit confusing maybe to some, again, like why would I look at that instead of just looking at price action? I think you should look at both, right? Sometimes RSI can indicate that the break has already happened. So like one example is back here in April. So you have another example of this, almost the same thing. You got kind of this push up and this kind of steady downtrend, and then finally gets to being over sold. Obviously when it's happening, this is breaking down. But notice that the RSI breaks out way before the price really rockets. Like if we were using the same price action downtrend, we might do that. And that didn't break out for a while. I mean, it didn't break out till basically the SOS. But on RSI, it had already jumped over. You see that? So we don't have that right now on our current setup. So there's no confirmation yet that, yeah, this is going to go. And that's another thing that unfortunately really bothered me about Friday's price action was that fake to the top didn't really do much to kind of quell any questions that I had on the higher to lower comparison for RSI. I will say that, again, it's as oversold as it's ever been since like April. And then in addition to that, we didn't take off from the lows, right? I mean, we kind of did down here, but like after that basing happened going into May, it took off from like 40. So where are we at right now? Pretty much the exact same line. You can see it on my chart. I'll make it like orange or something, but like you can see that motion. It's in the same spot that it was. Does that mean it's going to take off? I don't know. Maybe. And I wouldn't expect there to be the exact same like setup every single time. But usually, like for example, when we looked at MPW, historically it always breaks from like the 40s to 50s mark. It doesn't break from the bottom. On like high time frames, on like the daily, you can see it builds out and then it really takes off around 50. So you can look at it as a way of understanding maybe where does it really need to be. It doesn't need to be way down here in the gutters in order to take off and have a good run. We could be right where we are right now, okay? But we haven't broken, right? We haven't broken the bigger downtrend, and then we still haven't really jumped over this smaller one. So those will be signs that'll help you if you're kind of waiting for this big move to happen. If you were to see this come back above on the 4 hour, and I'm using 4 hours specifically, if you were to see this come back above the 47 area, that would be like a local breakout from this downtrend that started in September. And if you were to come back above the 50s, then that's a greater breakout of the much larger downtrend. And then in addition to that, we could use like waveform analysis on this cross if you want, but suffice to say, it's pretty straightforward. You've got the big M's here, and like I said, I think this secondary one on the side really, to me, looks like a bottom with a spring. But I'm not convinced that it couldn't go down again, like that there couldn't be a push up that drops even lower, like right here. Just not convinced of that. I'm not saying it's going to happen. I'm just thinking out loud that to me doesn't look impossible, especially given the overbought nature. There's a lot closer being overbought. Just even one time frame down on the 2 hour, um, it could be a bit of a hurdle. So doing more of a base analysis here on something that would be pretty important in the grand scheme of things. So I maybe attach this level right here at 47.50 to probably being the breakout here at 465. So I think you'd see a similar kind of move on that 465. If it were to jump and advance over 465, you probably see that advancement here on the 4 hour over the 45. I think the second advancement is going to be that big creek jump advancement, which frankly is just this huge pocket area right here from about 475 up to 493. It may end up extending up towards 5. There's a big range. And we use a couple different charts on AMC, and on some of the longer ones that I've had I have some markers on here that have lasted for a really long time. It'd be the higher creek. It's basically, again, 475 up to 493. It's the same exact thing on this chart right here. I think that's kind of like the big breach area, and that would be, in my opinion, us jumping over like this more major trend. So it's not a matter of like, here's exactly what's going to happen. It's more like, I think these are things that would help you to see a breakout. So if you're looking for a breakout on your own, on the 4 hour, crossing above 46 and then crossing above 55 might be very, very important. Okay, on that 4 hour chart. And they may signify things if they come in line with these moves right here and here. That would be very, very strong. Okay. If they don't, similarly, I think those are areas of possible rejection. So when you get up to 465 again, if you make that move today or tomorrow and you try it again, which is bound to happen, usually there's a drop and then another reaction. And someone I think asked about the wick. I'm going to go check. I'm going to check a couple things about that, but there's two reactions. One's down, one's up. We'll have to check the trajectories on those and see what they hit. But yeah, I think those are two places of potential rejection, right? And then if this were to continue down and you were to go to that lower pocket, I do think the probability is going to say to us that we're going to likely go pretty low. However, this is where things could get very interesting for a buy-in perspective, because whether it gets really overbought, really oversold or not, it is possible here that you could have a pretty strong divergence. So this might be a really important indicator, again, of a turnaround. Should we come down to this lower level, I think this is what we're going to see, is that this would sync up potentially with a divergence, meaning like maybe it comes down and it's either flat or like slightly higher on that oversold 4 hour RSI, and the price action comes a little low to maybe 433, just below 435. When we did the P&F chart, the 435 was the better final bottom here in this little range. And it would make sense because we basically camped right on top of that. So you were to come down to a spring level, you might hit that mark just below there. Okay. So possible opportunity there. Why not just buy in right now, Buxy? Why not just go? Why don't you think it's like done? Could be a V-shaped bottom. Yeah, it could be. The issue is we haven't broken anything yet. I mean, I'm not sure if there's folks out there that really want to call like these massive reversals all the time, and they just really want that. I don't really care about that accolade. I have at times called out for major swing reversals on these kind of bottoms, but nothing in the market's guaranteed, and I would need to see it really react strongly back up above 487. The last time we had one of these kind of, we call them like high heel stiletto kind of moves where it arced down was back here in June. And in June, the recovery never made it above that top. That's not really comforting, is it? Like, remember we went into July and I was like, yeah, this is a problem area. It could break out. If it breaks out, we're going to rock it. And if not, it's going to be a while probably before we go. I said at least August, and it took way longer than that. That problem area exists here as well. It's a similar setup. Just like you had that kind of bounce and drop here, that reaction was very steady, It was a really strong, like up, 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 up as the levels go. But once it got back to that top region, that's where it was really tested. And you can see here that even if it reacted really strongly over the next few days, there's no confirmation until you get back above here. It's the same exact kind of quandary that we were in back in July. Now, I will say this. If we were to make the move all the way back up to 5 at this time, and you can see it on my chart, I do think, yeah, you find support there, you're in really good shape because this is above, in my opinion, this is well above any creek that exists right now. And we've definitely had some that have persisted for a very long time, namely since July. I mean, that's the big one, right? And this has been not broken, right? It's yet to be broken. So there's this final creek that we haven't been able to get over. So the positive of this is that if the reaction is similar to the one that we got in very early July, June going into July, and you were even to make it up to 5, that this time you're significantly above that creek. And last time, you might say, well, something similar happened last time, right? It did jump a creek, right? Yeah, it did. But notice that the last time it did this in July, and I'm going to kind of pull this curtain down a little bit here so I can see better. And I need to get a brush tool just really quick so I can demonstrate. That's over here. I would say that this was the creek, right, that broke. And you can see that the nature of that, even though it seemed kind of strong, I guess, at the time, it really didn't hold very well after the fact. And we kind of bent the creek low again. So as soon as it jumped, and it did jump in July, specifically on July 22nd, it pushed back low and then it pumped high to distribute below that creek again. So it was like a sign of weakness, or maybe some kind of weird spring fake out to 485. No surprise there. And then it rocketed all the way back to the top and then dumped through it. And you can see once it dumped through that creek, and I'm drawing it on the screen, that creek basically got pushed lower, right? And so once that happens, you adjust it, and you can see that that's essentially where we are now, as we're kind of sandwiched between these two, in an envelope, or envelope, depending on how you want to say it. And that's the way it happened, right? So there was a creek jump here, but notice this is a little different. This is much flatter. This one was, even at the time, very steep. So in order for this to break, if it would have to essentially break through support at 475 again, and then do the same thing essentially did here, but like, I don't know, do it, I guess, a little bit lower and then probably steeper, I would imagine, because it would have to be like a breakdown. I couldn't understand why it would break through this creek. You know what I mean? And so there's a lot. It'd have to break through too. So I'll say this time in particular, there's a little bit more hope because you're jumping over not only just that ethereal creek, like we call it, but you're jumping over that resistance. You're also going back to 5, which is the liquidity center. You're also going above that 200. You're also going above both the 90 and the 180 on the 4-hour EMAs, the 200 SMA on the daily, all of those things, and you're at a really low RSI jumping point. So it's quite different from where we were back here, where we were already, in the upper echelons of being overbought, for example, on the 4-hour. Okay, very different. So we would be entering this with a whole lot more confidence. I would be anyways, with a whole lot more confidence. oddly, on the 4 hour, this 200 SMA looks like it's lining up as well with that ramp. So we'll see. Okay. But that's not what you said last week, Booksy. So what else is there to it, you know? What about what you said last week? Well, last week I had estimated what I thought would be more likely for a bottom, okay? Which is not necessarily a V shape. It doesn't mean that it couldn't happen. It's just sort of my opinion. And what I'm opting for is, again, that we don't actually go ahead and break out now, but instead we come back up. I would hope maybe just hit 466. It would look kind of like a double top, but it came slightly higher. That would be like a phase B. And then I want to see it, I know it sounds weird, but I kind of want to see it go back down and fill that tiny gap. And then I know it's going to be not preferred by anybody here, but it's just my opinion on the matter. I actually would love to see it come back down and kind of rattle on this bottom and then get a slightly lower low going into Friday. And basically, I think I said, no, going into Thursday. And then I think Friday you could have a reaction back up to 450 and be set to go on Monday. So it's not going to be anybody's preferred outcome here, but there are a multitude of creeks when we came down that kind of fan out. And typically what we see is we get sandwiched between like a couple of them and we kind of ride them down as low as we can. And then sometimes that's where you get that spring. And we did the same thing back here, by the way, in June. We just moved very quickly. You can see those wicks looking backwards. They're all over the place on the 4 hour, but there was a lot of movement right here very quickly across those creeks. You need to see something similar in this time frame. So I know it's not the preferred method of travel right now. I think most people would want to just see it take off, break out again, and go. Don't personally care if it does that. I'd be like, okay, cool, let's go, as long as it holds. But there's a really tiny, like 1 penny gap down here at 438. And they keep making these intraday, or little gaps in the morning or or even during the day that are just not really, I don't know, I'd say comforting. Not like it has to be comforting, but just kind of make me think that there's more going on. So here's one that we haven't broken yet right now. So I kind of want to see this one push, see if it can push above, and then we're going to look at the tiny price action for a minute now. So what would be nice is to see this secondary move push up about as high as the first, maybe even a little higher. And I don't know, it looks like it's positioned really steep, so we may just end up getting a breakout and a run this week. Yeah. It's difficult because I think this is kind of that setup you expect. There is still one here. Let me make sure these are correct before I put them on my chart. This one's a little higher. It's almost irrelevant. And this is the steepest one. But then there was one below. Let me see if we check that one. I don't think we did. I don't feel like this ever got tested coming down. That's the kind of stuff that makes me nervous, because when you position yourself up high and away from a creek and you didn't check it, it doesn't feel good. Granted, creeks aren't always straight lines. Sometimes they can be better illustrated by something like a curve, because they are adjusting as time goes on, like an EMA would. So it may be more prudent to do something like this and to say, like, this is where you'd have that creek test if it happens. I could see that. So I'm getting a little nitty gritty now, but it's time to do that. And then this is where that gap is. Yeah, so you can see it's kind of sandwiching between there. I'm not seeing another one. I thought there was another one like a little closer here. But I guess the EMAs and junk are all there, so could hit anything. All right, so let's summarize this real quick. Basically, long term, I think we got to hit certain big markers that I mentioned on RSI. That would be helpful confirmations if we push above 465 and 475. Helpful confirmations that could aid us in going forward. Short term, it's already kind of overbought on a lot of time frames. Like it's really close anyways. And I don't think it would take very much to get back there is what I'm trying to say. It really just depends. So during a markup, it doesn't really matter like that much. The small time frames are not that important. No one would say they are in terms of big movements. But again, that's why I started with the 4 hour on the stream, so you guys could see the build out as it is. It looks pretty good on the higher time frames. It's just those smaller time frames where you might see some need for pullback. So right now I'm kind of watching this, and I just got to be honest, I'm kind of fully expecting it to maybe attempt to break this, go up to like 466, and then we'll tell. And I think if it can make the bigger move, it's probably going to go all the way up to 478, and then it'd have to hold support above 460 if it's going to continue. So it should be a pretty interesting day today and tomorrow if we can do that. We may see some pretty big fireworks if it can break out here. And then we'll be able to look back and say, okay, let's go back and check those higher time frames, see if we're checking some boxes on RSI. Otherwise, and I know I said this is kind of my preferred outcome, and this is what I talked about last week, was there's a potential for this to drop back through and break low going down into this week into a real spring. If it does that at this point, it would fall in line with a lot of the other analysis that I've done, because there was a lot pointing to October 4th, not September 26th. I mean, I'm just saying it really did. September 26th never came up in any of the measurements. October 4th did in a lot of them, and there was a lot of reason. There's a outstanding uptrend here as well from way back, and it's not on my chart right now, maybe on the other one. Hang on. No, it's not on either one, but it's from like the April move, and it's right over here on the 4th. At the same time it intersects all these other creeks, intersect this 432 area. There's this kind of hot zone down here that I feel is likely, and that's why I'm going to keep that on the chart. And I think what would happen, if I'm not mistaken, is we probably hit this on Thursday, and then Friday we may even see it break out. They may not give it to us, just maybe end up being like 440 or something. But I think it's possible that even as early as Friday, I'd be really worried about that. I feel like that's what's going to end up happening, just to screw us over. It'd be nice to go ahead and get the break and hold of that creek, but this might be a better cliffhanger, right? Because then they can do whatever they want, flush it on. Shoot, they could flush it again next week, right before they go. It's kind of like some places where we've come to before. I did some measurements here on the local wave, this one, and it's basically ending right here. There's no further indication. It's gone as far as it can go, and you can see here, like, that's the wave measurement, and that's it. Like, it's just hard and fast, like simple. The greater wave here that built out on this M cross. So it needs to kind of settle in here and make a decision by the 4th. I have optimism, of course, that things could get better faster, and I would love that. It'd be nice for all of us to have a few days to like celebrate and enjoy some markups. But I just want to like keep the expectations where they need to be, because for myself anyways, like I think this is very probable. So I'm like, okay, maybe one more week. And I've said that a lot, but I really do feel like that's it for this wave. Remember when we went down, like this would be the low point in a wave. And then if it didn't react and break out, then you're done, right? Then you're just going to dump. I mean, I hate to say it, but if this ended up becoming some kind of a weird distributive action, then yeah, we're just going to go low. You know what I mean? Like that's it. But I feel like at this point, this is kind of the low point of this wave that's been building out since that change of character happened, and we stopped iterating that downward motion, and we started creating that final cat ear on August 12th. So this happened on IWM, and it was probably the best measurement that we had. So not to like toot my own horn continuously, but it's about the principle of it, which is like, did it work efficiently? If something works efficiently, you probably should take note of it, right? So a while back, at this point, feels like yesterday. It was a long time ago now. This was back in June. We did a similar kind of motion during this final double M here. And when it crossed the final threshold here of the wave, which was right here, that's your midpoint. I said, it's going to terminate on Tuesday. And this is the way I would interpret that wave in terms of there's a double top here, there's a double top there, right? But also just that's where the jump happened, So this would be that termination point for the wave. Does it make sense? That's not in my opinion, like that's not a very controversial call out. It's like a very consistent call out that tends to be right. And if you get the measurement right, you usually get the breakout pretty right. And we see this kind of often on your ETFs, which are a little more standard. They're pretty darn good about, that kind of thing. Just generally speaking, they're very accurate in terms of like, oh, well, there's an M shape, right? And then there's another M shape. Like, it's pretty straightforward. And that's typically like a bottoming pattern, depending on how it sets up. Could be a top pattern as well, right? But that's how we see them. So you can kind of see, like, if you're able to gauge on at least a medium time frame where that double M is, that's going to give you a pretty good indication of where that breakout target should be. Or at least not even break out. It could be a breakdown, but at least where it's going to terminate. Like, where is it finishing? Right? And you can definitely see here, like, this is kind of the final creek jump that happened right there. And the timing of it's very easy. It's where does it jump the creek in the middle. So when I look at AMC, that's what I'm interpreting right now. Right? So if we were doing like a similar setup and we were looking at this, we might suggest that this breaks high and then comes back down even. And you can see the current creek right here, and these two creeks. They kind of complement what we saw a little bit on IWM with these kind of push-ups. There's like multiple ones. Some are wider than the others. It's a little confusing because IWM didn't even respect like the top creek very much till like the very end. It kind of broke right back down through it. So it like tried to advance early and then it rejects, and you can see it visually. This is back on July 8th. This is funny enough is when I thought we would be going to break out on AMC, we had pushed up. You can see that advancement over the second creek. So there's two advancements. Like one's right here over the first, and then it backs up, and then it breaks it. There's an advancement over the second right here on the 8th, and then it backs up to the previous creek, and then advances. Very textbook jumps on these waves. And we've kind of not seen that just yet on AMC. We haven't pushed any kind of a move here, and that's kind of what I'm looking for. Just starting to see, hopefully what I'm seeing is like, I'm kind of waiting for that push, and I think that push is going to indicate, for us, I think it's going to indicate this move right here, and then we should get a dip, and then another push. So we're waiting for that first move. Again, looking at IWM as a comparison, you can see that first push over that creek on the second M shape happened right here. On the third, we haven't gotten that yet. We've just kind of been pushing down. So I'm really looking for that first advancement, then a retracement back. I think on IWM it did go back down to like that existing creek here. I mean, it was pretty much a straight line, so I don't know if pretty much. There it is. So it went back up after it hit that, came back down. You want to see a similar move on AMC. So again, I'm not pulling this out of like thin air, right? We would want to see this kind of be a similar push up, advance the creek, retreat, go back to the previous one, get the low, then break the creek, This is what I'm saying. I'd love to see this happen on like Friday. It'd be even better if this came up Friday and then came back down. Love that. That'd be like hot stuff. And then I want to then see like the next advancement really take off the following week, which is again, you're basically moving up and then probably going to back up. I don't know if you're going to back all the way up to this creek, but actually you wouldn't need to do that. I take that back. Because all you need to do is advance over this on that second push. Yeah, so it'd be like here. So this could push up high enough that on Friday you're going to hit that creek again and potentially advance it. Does that make sense? And then come back down and end at 450, which would be pretty solid. Like, that'd be really solid. So you could do that advancement on a Friday. See that? Like that secondary advancement on Friday right there, and then pull back. I think that'd be enough. I think you just go on Monday. Start taking off. Again, I'm using this as kind of a guidepost, but I'm just saying, like, it's a decent example of like how that breaks out after the end of the waves, because it has a very simple wall structure that jumps over evenly. Easy on the crossing of creeks. Yeah, I know. I have family in Western North Carolina. You guys got stomped on. Most of my family's been without power and water a couple days. It's going to be a few more days for a lot of people. I mean, prayers go out to you. I can't really do much for you. But, you know, just be safe. Take it one day at a time. You know, when I mean, I haven't lived through a hurricane. I have lived through some flooding, and I know it's not fun. And then more recently, I had Texas. They had the big blackout for 2 days and like sub-zero temperatures, and that was a brutal time. And it was probably 3 or 4 days before everything came back in line, and our water pipes busted and all kinds of stuff. Like, disasters are a lot. You just got to take them one day at a time. It's going to feel like a lot. Every day is going to feel like a year, and then you're going to look back and be like, I can't believe that was like only a week or two. But of course, in the case of the Carolinas and Tennessee, some of the damage is catastrophic. There were whole towns that got mudslided away. I mean, it's not everybody's just like, oh, I don't have power. You know, that's kind of the least of it. My family's fortunate enough they didn't get a whole lot of flood damage. They're all without power and water, but they were prepared. They had generators and stuff. So the family that lives out there. So yeah, I'm with you. Like, I'm getting texts from them every day. I am. Sorry, I can't use a different word than crossing of creeks, but I understand what you're saying. And just be safe, be careful. Water damage, as you know, can damage things that you don't see, so got to be really careful. You know, there can be secondary bouts of damage after the first, for sure. Anyways, so this to me looks pretty solid. Like, the setup is there. I think that if it makes this cross up early, we'll just kind of take it from there. All of this could happen above, right? This could be this kind of simple middle of the road type path. I don't necessarily think that's a bad thing. You know, I'm going to keep these on my chart this week. And if it ends up being kind of in the middle, it ends up being in the middle. So what? It's a guide. It's just, again, between the two goalposts is not a bad thing. Really just want to see that it bottoms out here. And I want to see it do sort of like what we saw on IWM back in July. Kind of has these creek crosses, and it does it all before October 4th. That would be ideal, okay? I know that it's not everybody's cup of tea. I know that there's a lot of folks that don't want that to take that long. I get it. You don't want to come back down. But I would just recommend patience here, because I think that there's a good chance that this is the bottom. And I know that you guys have been waiting a long time for that, as have I. And and it's evidenced by how many people have just kind of given up on this whole movement over the last few months. This sideways, people are frustrated, they get angry, they come on here and they just say they're angry, and how long is it going to take, and so on and so forth. And I mean, my viewership's been down like consistently ever since May, just constant down, 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 because people are just bored. They don't want to watch it go sideways. If you've been with me and you're paying attention, you're probably dedicated to the timing. Like, you care about the timing of it. You want to make sure that you're in a good position when it goes. You maybe not be shares only. You may also have some options and stuff. I get it. I would just recommend, again, patience, because you're probably going to find out today and tomorrow what the rest of the week's going to look like. And then I personally think next week's the best chance we've had since maybe Friday the 13th in the last about 2 weeks ago. I mean, it really is the best, and we're really close. This is no boy who cried wolf kind of nonsense. Like, that's the creek right there, in my opinion. It's right there. It's been lower and lower and lower, and it's just above us at 470s. So and this is my spring zone. So if like we're out of here, we're out of here. You know, it's that simple. Now, I did say back on September 4th, like, potentially that could be the spring. And I said that because technically, like, that dip was beneath my floor. When it started bounding out, I made the case, of course, that, yeah, it could just be this is the reaction before the spring, which is often what happens. Is you get like a basing and then you come up and then dive. But that's it. Like, I don't have any other, you know. So I'm talking about right here is an attempt to dive again, but you're doing it basically by already being underwater. You know what I mean? It's like you're coming up for air and then you just try one more time and see if you can push the price low. And there's no guarantees it comes lower. So, really close. Really close. Now, some of y'all are like, dedicated to, that's a good attitude to have, James. That's how I always think about stuff. He's like, well, I mean, you're waiting this long. You can wait a lifetime if you need to for certain things. So it's okay. But yeah, I think on the whole, we're really close. So for GME, I haven't really spent any time on it this morning. I want to say that the way in which this happened it happened in a way that it seems to be trying to avoid any kind of like a spring action, which is all there is to it. Okay. I have questions about this kind of a topping action right here, this S curve. If it can't breach the 2310 level, which we're currently sitting above, that was the big kind of level from last week that I was like, yeah, we really need to push over that. Otherwise, there's not much to celebrate. But it's more than that. This had a breakdown at 2346. I think that was the gap. My thought was it might fill that gap and then still need to have a retracement. It looks like an M top to me. 1, 2, 3, 4. It didn't make any kind of major sign of weakness, so there's a positive there. But definitely possible that we still get that backup, and it might tease out until the 4th. Now I have it on the chart here. I have one line that goes really low. You're probably looking at that like, no way, that's not going to happen. But it's dependent entirely on whether or not the operator has enough liquidity to go up here. And if they don't need to go any lower, they're not going to go below 2150. So I'm not saying like this is going to happen. That's a bad way to look at this chart right here. I'm saying you've got 2150 as a very probable support. And that's like the lowest you could go without losing this creek again. Last time, it straight up did a 50-50 gap around that creek. This time, even if it did a 50-50, it wouldn't go to like a new low. Okay? But there always exists a trend that you jump over. I always call it a creek until it's not, but it's basically just a straight trajectory trend. And if the stock price breaks down, the waveform tends to retreat to that center trend, or it tries to. So if it continues to push through supports, that's where it would ultimately go. That's what I've got on my chart right here. It is very low. It's like 1770s. I'm not going to sit here and tell you that I think that's probable, but I think that there's a possibility, because anytime that I've ignored that particular trend, it's come back to bite me. So I have to keep it on the chart. I have to. It's not an option in my opinion. Like, it's there. We even did the same thing back here, back in August 5th. Started in June 11th. We pushed out, and it ended up being one of the steepest ones. And when we pushed out, we went high, and then it was like, well, you're not going to go all the way down there, right? And it just kept going, right? And to my detriment, you know, because I'm the one sitting here talking about it. It's like you've got all these other possibilities holding, but it never held. And it ends up going and retreating back to that kind of lowest cross trend, if you want to call it that, because it's going across the waveform. So we've got multiple, every time the stock price moves up or moves down, it's generating those up and down, going the kind of the reverse way. And the one down right now is very low. So you need to be aware of that. However, though that is the case, this is a good however. The volume buy-in here was pretty good. It bought in real low back here on the 20th, the 23rd. The buy-in was really strong from the bottom at 1975 up to about 22. And the reason that's important is because the volume dropped off a cliff, but it did it before it got to the top. It didn't spike at the top. So the volume is distributed in a way that's kind of inverted of what you typically see with a upthrust. So in an upthrust, you usually get a ramp of volume into the top. And in this case, the ramp is coming from the bottom. That's no guarantee of success. It's just volume as an indicator. Volume as an indicator is a way to kind of try to understand as best you can maybe what's going on with the price action in terms of the supply and demand. And in this particular case, yes, there is a heavy sell-off. You can see the heavy sell-off that occurred on the 24th on GME with that drop, but then it returns back to pretty average to low volume, and it doesn't drop again. It just kind of floats. Pretty strong, okay? And even goes up and makes another high on fairly low volume, and then it just kind of chills out. Some of these things are just things that are easier to see in retrospect. It's hard when you're in the moment to like know what's going to happen. You don't know. You know, you're coming into this top, you're not really sure, and it could have easily been the opposite. Like you could have gotten to this top and had this explosive move that was an upthrust. You just don't know until you get there, right? But looking at this overall, you're like, sure, it looks a little more like an S-curve. Absolutely. And it's at a place right now where, yeah, this is kind of the critical spot where you're going to either push above, right? You can see it. There's a number of reasons for that. You've got the macro downtrend. I've got it in blue on this left side, and it comes all the way back from like the remember the Roaring Kitty stuff? Well, before that on June 12th, so right around that time period though, it's like the 7th down to the 12th, there's another reaction. That's the main trend that I've got coming down, the big creek. And I think it's jumped it. I think it's jumped both of those. So like I'm not seeing a whole lot right here that looks bad. Like we got that push out over both. So you can see this cross, these two trends coming down here, 1, 2. Those are the two most dominant creeks that GME has. And it's above both of them. So why is it not just rocketing, Booksy? Good question. I don't know if it needs to come back and hold a support. I'm not seeing like smart money buy-in here. That's like huge. I'm thinking that this is like an S-curve that once it finishes will back up and then it's going to take off. So it kind of reminds me of a bit of an S-curve ascending accumulation where they do the buy-ins and then you get to like a peak. Maybe it's at that 24 mark and then it comes back and kind of just goes from there and takes off. And this might end up being what happens in terms of like the support checks and stuff. I have this on the chart anyways over here. I just have it on 2310 and then 2485. We may see that S-curve kind of terminates with an attempted push of the resistance of 25. It's about 2490, but whatever, 2470 or whatever it is. That's that big middle we've been talking about. That top area right here. I think it looks on this chart 2476. I've got it at 2472 over here. It doesn't really matter. It may be that we need to push over that and then hold support this time on 2310. So that could be the whole week's price action basically. If we're talking about taking off Monday, I've got this really fast. But sure, like that would be a really positive way to end the week. Going into Friday, if you were to end above 23 on Friday, could be very, very, very strong for Monday. So I know it's not, again, maybe it's not ideal. Maybe you want to see it just kind of explode. I don't really care when this happens. It could happen tomorrow for all I care. But I think it needs to happen. I think there needs to be that push up. It needs to go an attempt to maybe push resistance around 2480s. And then perhaps after that, come back down and rest. And that would be this is basically the platform by which you would launch from, which we've launched from one, two, three times since May, arguably 4. It's been the big kind of gap up movement point. We need to get on top of this again on 2310. So yeah, that to me would be really solid. You can see that there's no other creeks that I have because there are no other ones. Like it's essentially out. If it can get above here and hold support above 2310 now, I think it's out. You're gonna then worry about these kind of we call them cross trends, what do you want to call them? The underlying bellies, right? You'll still hit those. You'll still hit horizontals, but in terms of like those downward pressure creeks, the ones that really are pushing resistance, holding you down underwater, right? That's it. I don't have another one. Like that's the last one. So it's probably easier to see it on this chart. It's a little simpler. You guys are like, no, it's not. It's hard to see that. Yeah, maybe it is a little difficult to see. Hang on. Some of this stuff I do like intraday analysis on, and then I can't. It's hard for me because I go back and I'm like, well, it's still there. It's just not whatever. So we suspected that somewhere between September 18th and the 26th would possibly be where you have like a pivot. And so far it's looking right. But it's a little too early to kind of say it's worked out. This area, see that yellow pocket right there? That was the last time we kind of approached those two creeks and we got rejected. So when you zoom in, these two blue lines that are crossing downward. And again, that intersection was at 2465, which just so happened to be like that perfect middle point. Now you can see where we are. We've technically jumped over 1. We're trying to jump over 2. So it's easy for me to see this like moving up and then coming back and then just taking off. And that to me looks like a solid M cross potentially. The only thing I just can't tell is I can't tell if it's going to be here or if it needs to come back lower first. I'm not super worried about it. If it came back down, I think I said 2150. I think that would be pretty solid. We could probably hit there and avoid going like significantly lower. And then we'll have to see. Okay. It looks good though. Same deal as AMC. Like you're making the advancements. You just got to kind of take your time and get over them. This looks good. So far, so good. Did it double top or what? Let's take a look. Looks like it double topped at 2465. Why didn't we push up slightly higher? There's not a lot of volume there. That's probably part of it. Like nothing. Like no volume today. It's significantly lower than it was on Friday, which is saying something. Very, very low volume. We also hit 4:30 in pre-market. Don't know if you've already gone over this. Sorry, I've just tuned in. Yeah, somebody talked about the wick down earlier, and I just kind of glazed over that comment. I apologize. Yeah, I don't know. Maybe. I mean, that's like I've said before. It's pretty much like the spring zone. I don't know what to make of stuff like that. I don't typically like watching extended hours for that reason. It's just not possible to predict if that outcome ever really matters. So, there we go. We hit 466. Sometimes people look at that stuff and they say, "Oh, it's a legit backup." Sometimes people say it doesn't mean anything at all. Some people say that it predicts the future price action. Has it predicted future price action before? Yes. Has it also been completely irrelevant before? Yeah. I mean, if I were to say anything, I would say it indicates that somebody somewhere wanted to get to that low. It doesn't necessarily mean that it's going to do that in regular trading hours, but somebody needed to get it down that low. And they did that intentionally during after hours pre-market trading, extended hours, if you will. It does not always mean that it's going to go there in the future. It just doesn't. We've seen it happen enough at this point that it can be thought of as semi-predictive, maybe, of somebody's intent. But we don't know if it's the operator's intent, like the big operator, or if it's just a random person getting an order filled. Dark pool order print. ETF order print that's late. There's all kinds of interesting theories about it. I mean, just staring at it, to me, I would say if I saw this in regular trading hours, I would say, yeah, it looks like a spring. It looks like that could have been it. But part of me also wonders if this is, again, like a push down before kind of a push up that's designed to kind of, just like what we saw over here, maybe designed to give you like a propulsion upward that then you drive through again. In which case, doesn't mean anything. It's kind of just like, okay, so how high are we going to go then? I don't know. You know, maybe it indicates that you're going to make a move up to 472, but then drive the price back down and try to get back below the floor. I have no idea. I think it's too much speculation. And anybody that tells you they know exactly what these things are, I don't trust them. Because they're trying to tell you to believe something that's kind of by nature speculative. Like there's no way to know exactly what's going on every single time. And I've seen so many explanations that I don't feel like anybody really knows the answer. It's all just kind of speculative guesswork. So yeah. No, I didn't cover that because I don't typically care that much about extended hours price action. I mean, if you care about that, then you should look back at that one wick we made down to like 415. You know what I mean? Like, what is this about then? I don't know. I've heard a lot of good traders tell me that they do not trade with extended hours at all. I've heard a lot of good traders say that they do. I'm the kind of person that kind of flips back and forth, but I typically trade with just regular trading hours because when I hear the explanations for both, the regular trading hours argument just rings truer to me, which is if the market's not participating in something, then it's hard for me to check that box and say, yeah, we did that check, it's adequate. Well, the market didn't participate in it. And frankly, up until what happened in May, that big, gigantic 100% gap up, I don't really feel like AMC's ever had, I think that's the biggest gap it's ever had. I could go back and look, but I don't feel like it's ever had a 100% gap. I mean, And then just to see the volume that came in extended hours during that time period was just incredible. But up until that point, like, I just, maybe the Judge Zern decision, that was a huge gap. I remember that being a huge move in the extended hours. There was another one right here. It just feels like outlier events, that don't really add up to much. And ultimately, like, which was truer, the regular trading or extended hours trading on this jump in June? I mean, in my opinion, it was regular trading hours. Like, that's what established that 575 top. Like, it wasn't anything in extended trading hours. The extended trading hours went high, but no one participated in it. People were angry about it. And it's like, yeah, well, which is the truer top? Is it that extended hours top back here? No. It's just not. It's the top that we interact with the most. That's what ultimately determines resistance. So, in the end, is 575 or whatever that was, like $6, whatever it was, is that more important than ultimately like 545, like where we spent the most time trading sideways? No, they're not. So it's kind of a pointless thing to me. It's like, I don't really care what it was. I care about what happens here. It doesn't make sense for me to get on and say like, oh, that was it. That's the spring, guys. We're going. That'd be really dumb. And if somebody else said that and I just called them dumb, so be it. But that's just the way I feel about it. I think it would be a dumb thing to say. Like, that's it. We're going. Like, okay. Well, then you could have said that back here and you've been flat out wrong, Like, I don't know what to tell you. It went lower back here. So I speculate that it's part of it's almost like a phantom move. Like, you don't see it here, but I speculate that it's probably part of some kind of a 50-50 swing around this 450 level to get to a higher mark. That's my only real speculation. I don't know who it was, what their intention ultimately is at the end of the day, but I would say like maybe there's some kind of a principle there with the slingshot, like you're pulling back and then creating a momentum shift upward. No idea. Beyond that. So if we're looking at something like that, maybe it goes up to like 472. Big picture here, just want to see if it's going to push this first resistance, and it did. So that was check number 1. And then we're going to probably at that point see what happens above 465, see if it can hold. And if it can't hold here, then it's going to go all the way back down through the bottom, more than likely, or at least try to. If it can hold here, I think it's a bit of a game changer. I think we might go back and look at it a little more closely later in the day and see what happens. So WTO, you're about to take a lunch break. I will look. With AMC moving, I don't want to look away for too long. I did check it this morning. My surprise is holding up. Not really. It just looks like an M cross though. Like, it still looks like a breakdown to me. This looks like a double up thrust through the 50-cent floor and then a breakdown. So my expectations here, unfortunately, still that it's going to come down pretty low. I don't think it's necessarily going to drop as low as I put it here. This looks like ridiculous. I don't know why I did that. That's the bigger picture, but it could come down to like 40 cents pretty easily. Yeah, there's a major trend around 40 cent, and I think 43 cent was the mark that I had for the head and shoulder breakdown. So technically that first head and shoulder breakdown is finished. There's nothing else there. 43 cents was the target for that, so that's finished. This particular setup back here on this 23rd. Now you're just looking to see if it can even recover. If it can't recover the levels, then it's probably going to continue down, I think, to this support at about 40 cent. So it's the same story as last week, maybe unfortunately. If you don't get back above 50 cent here, I don't really see any reason to be very excited And I don't want to kind of keep that as the gold standard forever. If it keeps dropping, it's going to change. But for now, like that's the place where we're going to have the most contention. You can see that's the whip around point for the price action. The place that it abandoned that turn up, right, was right here at 58 cents. And then it just started dropping back through levels. So, yeah, it has to bottom. It hasn't bottomed yet. So I'm not saying it's all done. Obviously, that 43 cent, I think that was the target for the head and shoulder. I think I mentioned that in the Discord group. It's just a 50% of this head marker from the breakdown point right here. So I think that it's done, but that doesn't mean it's bottomed, right? It just means that's done. And I'm seeing this as like a cat ear, like a push up and then a 1, 2. Similarly to other things that you might expect, you're going to take that breakdown and measure it out. Where did it cross the creek? It's going to finish today, sometime on Monday. Yeah, and unfortunately, again, like, kind of looks like it went the opposite way here on that pivot point. Like that pivot point, it just kind of turned down. So I'll give it to tomorrow on this M shape because I think there's enough space there that it could be till tomorrow, like first thing in the morning. But after that, if it's still breaking down here, I think you're just looking at a macro S-curve. I don't really know what else to say about it. Like, this would be as sort of the target area, you know, down at 40 cents. Okay? All right. So, yep, we got our target levels then. So for GME, we're looking at needs to hold. I mean, it just depends on how the day goes. I don't really know yet. If we get up to 24.90 today, then we just want to hold above 23. If we end up selling back through, we want to hold over 21.50. For AMC, my expectation isn't that it just runs right now. My first instinct is, again, going to be the first setup that I saw, which is this auto reaction and then maybe a phase B top. It's looking okay. We talked about some time frames being a little bit overbought already. And volatility's got a nice divergence right here, which is nice. I know, not going to benefit everybody, but yeah. Higher high, lower RSI, that could change, iron out. But on the 30-minute, that's currently a bearish divergence if it tops. So if it manages to, if it breaks back through 462, and it kind of hooks through there, you're probably going to see this as a top on RSI, and then that could be bearish because you've got a higher push here with a divergent RSI, slightly less volume. But I think we were talking this morning specifically about the higher time frames, plenty of space on 1 hour. If it needs to kind of correct on smaller time frames, it will. 4 hour was of more importance. We talked about the push above 47 as it came above here. And that so far that's been semi-right, although it's pushing pretty high pretty fast. And the price has not moved super far from this morning. It's only moved a few. Yeah, it's moved. I guess it was down here at like 454, wasn't it? It's moved about 10 cents. Yeah, but we mentioned these three levels this morning. I've marked them off in orange on the chart. One's right here at like 465, and I said that it probably correlate with a bust out and support here on the 45 on RSI. This is a 4 hour. The next level up is that 485 level. And it really goes from like 475 to 493, but we can average it out and say 485. That should be a push on the 4 hour above the macro, which is a big picture trend that's been going on for months now, since June on RSI. That would be the move above here, potential breakout move. Much like what happened back in April after it hit a low, it broke out and RSI actually bottomed early and then took off from around 40. We don't have quite the same setup this time, so it may not look the same. You may have a bottoming here first, around 43, and then another secondary bottoming at like 54 on RSI. And then the lows, if it breaks down, I think it'll be divergent. I got a feeling. Even if this comes lower, the price action, call it a intuition, but I'm just kind of looking at this chart and the way it's moving right now and how high this is. I get the feeling if this pushes low, it could do so without even breaking a new low on RSI. I think we might end up getting like a divergent RSI on the 4 hour, which would be really good. That'd be a really simple sign of potential turnaround. And that's kind of what happened here to some degree. It's a little more hidden on the May run up, but yeah, so that looks good. I haven't really talked about IWM except to do the comparison this morning. What is there to talk about? Not much. Kind of looks like what I drew out. I don't like to say stuff like that. Like, it makes it sound like I'm kind of being haughty, but I'm really genuinely like, my thought process behind saying those things is to say, did something change? If nothing changed, then I don't have any reason to just completely reevaluate the TA. So yeah, it's pushing along this creek. So originally we thought, this is the first line I drew, ignoring this green guy right here. Originally thought it would kind of bounce and do almost like a head and shoulder by bouncing at 217 off 222. And if it breaks down again, I think you're going to see it pivot all the way back down to 213. There's a gap down there. It's an important level on a greater picture because of this creek coming down. Does it have to do that? Well, no. But if it's going to have an LPS here locally, it probably won't do that. But if it drops low, I think it's going to go ahead and just go for it. It makes sense to me to just pivot here and head down and get that creek check. Honestly, I think if it can manage to stay above that 212 area with support, it's probably just going to take off. Like, I don't see it as a bad thing at all. I think it should just take off to the upside. You can see why. There's a very clear indication here that would be a creek support, and then you could just leave. So I speculated we see kind of a double topping last week, like right here, that we would cross up, head towards this particular ice level. It's more of an ice. It's like a cross trend that's moving upward, and it broke through that ice back here on September 25th. Came back up to check it. That's the top of the head and shoulder, and then sort of struggling right now to hold the secondary trend, which is this uptrend. So you can see that this morning broke through it and then pushed back out. If it held here, maybe it just continues up, but if not, head fakes or anything like that, just to the upside, slightly above 221.57, maybe the high here. Doesn't need much more. It would probably just capitulate. So it looks like it could be bullish, but it's really close to being bearish. Yeah, I think if it pushes slightly higher than 221.57, it's possible that it is a head fake. You'd have to wait it out. What if it's not a head fake, Booksy? Well, if this was some kind of a spring attempt here and it failed, I don't know if they were just going for that gap or what. They definitely pushed against that creek like 3 times. And I've seen IWM kind of slip beneath the creeks like this and recover. But what you'd have to see is it jump back up here and hold like 221.40 or something, basically above that 221.37 level. 221.47 level, excuse me. It says 221.58. I keep saying 40, but it's actually 221.58. So it'd have to hold above 221.58 in order to see any kind of continuation. And then you still have to get above 225. So right now, I'm leaning towards, I don't know. It looks like it's trying to hold, doesn't it? It's like struggling. I'm on the 2 hour. So you can see that it jumped over the moving average on the RSI. On the 4 hour, it's actually below the moving average. It hasn't jumped it yet. It does look like a major creek jump did happen though back here, and it held that support. So it's just a stone. I mean, it really is the same story. It's like a stone's throw away from a distribution. Because it rejects here. It's basically like a double top confirmation that it's not going to go, and then it would just fall. It's like what happened back here, but bigger. You see this move up in August, and then notice that there's like a hook here, and then notice there's like a double top. That's your cat ear, right? And you're seeing the same exact thing right now. So there's a just mild kind of hook, and then you're seeing like the first ear, second ear business right now. So you see how like it's very, very similar, and you'd be in a really, really easy to see like drop if it may not go that far, but easy to see drop if it rejects right now. Yeah, and even the price action looks basically the same. So this kind of move here, the double up, it always comes down to the second cat ear, folks. It's no different. It doesn't matter what chart it is. So if the second cat ear crosses the creek, crosses the resistance, it's possible it's a breakout. That's the beginning of a breakout. If it doesn't cross the resistance, most of the time, all that really can confirm, well, what that would confirm is that it's probably going to go back down to try to find the support. It doesn't necessarily confirm it's going to break down. It depends on where it is in the range and the scope of it, right? Sometimes it's like the end of a range. It's got an upthrust with it. Yeah, it's probably going to go all the way back down through the range. Sometimes it's not. Sometimes it's in the middle of the range. It doesn't necessarily mean it's going to break down completely. It's just dependent on the setup. Right here, it looks to me like the creek below it is right there. I mean, it's right at 219, right at that gap. So if they were to go for the next gap, which is at 218, it would break below that creek, and then you're basically in like head and shoulder territory at that point. You're at the neckline again. So this would be almost all but guaranteed to come back to 217 if it can't hold right now. But then there's a secondary move here. Yep. And that's the 50-50, I guess, around 217. And that hasn't been confirmed yet. So it's your neckline, etc. It's all right there at that same spot. So at this point, we'll just kind of simplify it. I'm not going to keep this one on the chart. I think this is your cross up. It's struggling right now to hold that trend that was going up. So make no mistake about it, like this turns down, it's not bearish on the big picture, okay? It's just going back to check its major creek. It's really important to put it into perspective, because if you look at that and you say, oh, it's bearish, it's going down forever. No. That's not what's happening. Like there's a huge creek test that hasn't happened. And it was before FOMC when we jumped it, and then FOMC kind of pushed us over the edge here. But that retracement back down to that gap level around 211 to 212 is totally healthy as a retracement of this, as a backup to this creek here, right? And then even bigger than that, if you look at this as like a bottom and an auto reaction, this could very well just be a phase B top. And I talked about the possibility of then this being like a really long-winded, I mean, it's definitely possible. This could be a really long-winded bottom if that breaks below. We're not there yet, but I would see that as like a macro range build out. Why? Because again, bigger picture, this is the cat ear. If the cat ear can't manage to hold on the big scale right here, and it doesn't hold that bottom, right, you're not going up, you're going down. That's kind of the general rule of thumb. So, and then on the big picture, it's not necessarily super bearish. That's not what I'm saying. In fact, I think it'd be hard to argue that it is. Instead, it's more or less like a wraparound of the creek that exists here on this first ear, which is the first wave out, which is your auto reaction. And then this could be a phase B top. And you're probably at that point looking at a much longer breakout period. I hate to say it, but it kind of clearly points to a potential election time break. make or break moment, you know. Like basically you could have like a creek jump going into elections and then break out right after that. So how does AMC interact with all this and GME interact with all this? It's debatable. One thing I would say is that August 5th, that would be potentially like your first support, right? And then if you've got a secondary support at 204, so the first support will be way down here at 196, second support at 204. The next support doesn't necessarily have to be super low, but there is a gap at 201. So my expectation is that that's actually where the support is. If there's a phase B like continuation here, that you'd probably have that phase B support at 201, and then you'd spring beneath that. So that would end up being like your spring level. And then my guess is that it's going to dive for this check again, another one. You guys are like, what? Well, it's just what's common sense. Like, that's what's there. And I genuinely think it may be a little bit hard to understand that because, like, why would we go all the way back there? Well, I asked the same question when we dropped down on August 5th. Like, why are we going so low? It was a test of this major creek, right, for fear of a recession. But it also goes back to, like, the history of the chart because that level that it went to right at 200, yeah, it's a nice level. Sure, it's nice and even. But on the big picture, that's where the range was bound. You know, that's the range top for however long this was, 18 months or whatever it was, a year plus. I mean, it was a long time. So it basically all builds out around 200 to 202. So for us to back up there isn't exactly unusual to have like an SOS and a backup. And then if we create like a very, very powerful, this is that like quadruple flush, right? Like 1, 2, 3, 4. If we did something like that, that could be ridiculously strong for a breakout. I think, frankly, I know it sounds weird, but I actually think the potential for that is that it goes significantly higher than what I thought. We may be talking about a move all the way up to like near 300 as opposed to 250, because that kind of a bottom doesn't happen without some pretty major reaction off of it. So big picture, you might say that looks kind of like meh, like I don't really like all this sideways garbledygook or whatever it is that you're talking about. But does it make sense? Sure. I don't feel like it's a big deal. It kind of just look like it's doing like an actual macro kind of accumulation range right here off of 200 as the floor, which is super strange, only really strange because it already looked like it was in an SOS to me. It looked like it was doing the same thing. And here's an argument against that. If I'm going to make an argument against it, this is probably the best one you could make, which is previously we've done this kind of similar build out here and we didn't have a spring. And so this is not a spring moment right here. This was just support. If the desire is to just kind of flush the market and get the spring, yeah, I think you're going to flush this way and get it. It seems pretty obvious. I'm looking at 2 hour, but we can go up time frames, and I think it's pretty straightforward. That you can have that nosedive to sub 200 and still be okay, and that could be a macro finish for a major reaction. But the argument against it is that, well, it didn't do that back here. It just had like an LPS and then took off. And that's exactly what we're talking about locally. That's what this is. It's basically like, no, you don't have to do that. You wouldn't necessarily break below this creek or the rising creek. You could probably base out early October here around 212, maybe down as low as 210, and then basically you just take off. Right? There's a lot of space here, so it's a similar kind of picture where, yeah, it's possible it just takes off super early, but you could even see this kind of take forever, just sort of like this one did, where you come back down and you really just take a long time accumulating around 214. I don't know if there's a better place to do it. It's kind of around the recent top at 210. So 210 might still just be like the ideal spot for that. Do I think it takes that long? I don't know. It could. It could take until mid to late October, and then it's the opposite argument. Like it runs up into November, not after November elections. Just depends. What about the big S curve, Booksy? I thought that thing was still real. It is, and I can't find a better spot for it, so I'm not changing that. Maybe later on we can look at this and see if it makes sense to do a wider one. But right now, I don't see any reason to change it because the trajectories on this push out ever since that push out in July for IWM, they've been matching. So I'm not really sure. I'm not really sure what to make of that, except it didn't. Maybe it didn't change. Maybe that still was a goal that bulls had. That big macro S curve was going to follow through, and we're just kind of testing. We're in the final stages of testing. If that's the case, shouldn't it be up here? By Friday? Aren't we looking at like a major break point right now? If I say that, some people out there are going to go out and YOLO and think that it's going to rocket all the way to 250 by Friday. And a lot of people are going to also stick their nose up at that and say, well, that's a dumb thing to sort of call out. I'd say it's not that complex. I'd say it really boils down to what I'm talking about right here locally. Because, think about it. If this is a possibility, and we're talking about long term here, if this is a possibility that, this has an extended drag back down, that you go all the way back down to 213, okay, fine. From that point forward, you've got a number of possible what ifs, right? Then you could just sit here and go what if forever. What if it breaks back up and this and that, and then it just keeps going? Yeah, we could see that. What if it continues down? Then I think we see 210. What if it breaks below the 210 area? Then I think we see an extended downward portion until possibly November. Those are kind of like my bigger picture scenarios, right? Well, what if it just breaks out right now? What if it just goes up? What if by, midweek, we're sitting up high around 225, camping out? Is it possible it just runs? Yeah, I think then you're looking at pretty much the same thing we were talking about originally here, which is, I think it's possible just finishing. This is the backup. This is all you're going to get. And it did. It backed up to A Creek at 217. Did it leave a bunch of gaps? Yeah, it left some gaps. Does it have to fill those gaps? I don't know. ETFs are weird. Sometimes they do and sometimes they don't. That's just how they are. I don't really want to argue about it. People always want to argue about gaps. But we can go back in time on SPY and IWM. We can find gaps that never got filled. They're all over the place. It's about the value of the market, inflation over time, things like that. Okay? All I'd say is that, sure, the necessary motions for this, 222, 224, absolutely. Comes back above 224, holds that support, 225 or whatever it is, I'm sorry. I think it just takes off. It's very possible. And then, frankly, this could happen going into next week. I mentioned that it's entirely possible that my trajectories are like good but not perfect, and it could be like a day or 2 or 3 days off. So it's important to know, like, this is like a window. It's not meant to be like, exactly on this date. Well, then what happens if that's taken off? Does AMC take off with it? I don't know. Didn't do it last time. When it took off in July, AMC didn't do anything. It's kind of the opposite, I don't think it necessitates a move by AMC and GME, but just to entertain the idea, what if it just takes off? Well, we just did the measurement, and I think it's the same thing we're talking about already. I think it's basically the same exact thing. We're looking at this as, okay, it's breaking out. In order for IWM to break out, it has to come back above 225. If that somehow happened by Wednesday, if it were 1-to-1 for whatever reason, you might expect that by Wednesday, AMC would probably be already up in this area again around 5. It's essentially at the creek, and then potentially it just advances quickly through the rest of the week. But it's got to get moving, you know. You'd have to see these checks happen pretty fast. Yeah, it'd have to be around that 5 point. I don't think it's as important that it's way up at the real like macro SOS at that time. Like it'd have to be at least at 5. I think it can move from 5 as IWM moves off 225, because even though it's kind of important to be up here and make this SOS at the appropriate place, which is around 560, that's not a what if, that's a definite, it has to do that kind of motion. I think that could happen into the following week. It wouldn't have to be like now, you know, and it could still be pretty healthy. Does that make sense? I don't think there's any kind of rush. So in theory, like, sure. Is that how this measured out? No. I mean, I'm just telling you the truth. It didn't measure out that this would be breaking out on the 4th. It measured out that basically the 4th into the 7th would be the pivot low, and then you'd be breaking out. But what am I going to do, you know? I got 2 different possibilities here. Maybe it's a little bit more like what happened the first time. When AMC made its big move in May, there's very little going on with IWM. I mean, with the ETF that it's a part of. Arguably, March, you know, you had the most probably change of hands in terms of who's buying what. You're going into the next quarter, you're probably looking at rearranging stuff within an ETF. By the time you get to April, May, I don't know exactly how to put this, but essentially like May 15th is where you see the biggest buy-ins on AMC. It's where all the 13Fs are filed, and AMC and GME both have a lot on the 15th. That's when the range actually begins back here. It's like right on the nose. So it's strange because this little markup, as we might call it, that happened from, it's a super fast one, the 10th to the 15th on AMC. For IWM, just look at it. You can visually see it. It's not that big of a deal. It's in the middle of the range. The only argument I think you could make is that there's like a position swap going, like they're taking profits from other things that have already run, maybe moving them into AMC. But there's no major influx of volume on the IWM, on the Russell 2K. There's no major breakout. It's just it hit a bottom in April, built back out above the supports eventually in June. It doesn't really make sense that that's right here is where you see this major move on the 10th. So it's almost like a delayed action. So maybe one of the things we could speculate on, and this was about, again, if you look at this, this goes from the 19th, this little run up on IWM, goes from the 19th to the 15th, okay? And for AMC, the 19th is pretty darn close to where that low is. It's not on the low. The low itself here is on like the 16th, right? And then you can see the 15th is over here. So on the whole, is there a run up between these 2 points on the chart? Sure. You know what I mean? Like, yeah, there is. And it's weird too, because when you look back on it, it almost looks correctional. You know, you look back at the bottom here through where that little gap down and the support was on the 29th of April, you can see that it almost like the chart almost auto corrects right through there. It's probably one of those swing moments, right? You get like a double whoosh above, 50-50 above, and it comes all the way back down. It kind of corrects there. But it's a lot like what happened in the SPY. I don't know if you guys recall this. We did a long time ago, I did a comparison. I'll just gently kind of recap it. But a long time I did a comparison between SPY and AMC. in 2020. And in 2020, there's this moment, and it's like right at the top of the cat ear. There's a second cat ear on that 2020 setup, the second top in 2020 on AMC. Right at that second top where AMC potentially could have broken out and like kept going up. That's where the market SOS goes, or excuse me, SPY goes into its SOS out of the COVID drop. So like SPY was kind of doing this business in 2020, and then AMC goes down and goes down towards November, December 2020, and it actually goes really low, right? It goes down for like a spring, and then it takes off. This is really similar in some ways. It reminds me of the same thing because you kind of see that right here, after it pivots and it goes back up to the second cat ear, on May 3rd, there's a possibility, there's a possibility there. You can see the second wick up. There's a possibility that it runs up and keeps running, but it doesn't. It breaks down. So it doesn't jump over the creek in any form and just start advancing towards the top, which would have been a more suitable S-curve. I mean, visually you can see it. We talk about how these S-curves, every M cross is a potential S-curve until it doesn't cross, and then it breaks down and goes towards some low. Well, I think this is a similar argument that we probably made in that 2020 SPY comparison to AMC. This looks like May 3rd. Let's take a look. So when we look at this S-curve here, we can see that the center mark where it broke out here is May 3rd, and hence we get that confirmation of my bias about this stock market, right? Yeah, so you get the breakout on the 3rd, second to third. So there's a sense in which when, for whatever reason, when S&P and the IWM have had these breakout moments where they're breaking out and they're reaching, I call it an SOS because it is. It broke the top of the range right here. This is where the range was. When they're doing that, AMC's not going with them. It's going down towards its spring. So AMC, instead of going up here, takes a detour. It has a double top, and it goes low for liquidity purposes, and then it breaks out with violence, right? Like serious violence, and ends up coming back in like a really radical fashion in this massive like whip around. So if you were to compare the two, it might look something like this, right? Which is strange. So if you were to compare the two again, it's like, oh, during this time period, IWM is like pushed up here to the top, and then it breaks out on the third, the second and third, and then it pushes higher in a more steady pacing, right? Meanwhile, AMC goes, spelunking for liquidity, and it does this massive whip around of what may be considered like a normal trend. And it does catch up, and weirdly it catches up in like a very systematic way. It even meets up. That ends up being the range top, right? So when I look at this, I'm like, is it possible that we see something similar? Sure. It's possible. So let's say, for example, we're expecting that maybe they run together. And so we're thinking about this very linearly, like, oh, it has to go down if AMC goes down. Well, what if that's not the case? What if instead it's doing something like this where it's breaking out, and this is like a 50-50 locally towards what will be a top? Okay, can we make that argument is what I'm trying to say. I think the answer is yeah. If you look back at August 5th, and we might have to do it even smaller than that, but if you look back at August 5th, this ends up being the same trajectory, isn't it? It's probably about right. It looks like the 50-50 is indeed right where we think it should be, at 222.45. So if there's a similar argument to be made, it would be that we're doing essentially like an M cross here, correct? That's similar to what we saw back here. I know it's a little weird because they're not one-to-one. It's a similar move. Yeah, that makes sense. it did jump right there, and then it jumped again on the high here. This is also really low, and this is really high up. But it's the same principle. So it does lack a kind of check. It does lack a little bit of a checkbox here. Also, this doesn't make sense in terms of a trajectory because it looks too steep. So let me double check something. Yeah, so this trajectory was also too steep back here. If you had used just the first two, you would have thought that it was probably going towards the middle. GME is crossing 2362. You would have thought this is going towards the middle. Ah, but this didn't actually go towards the middle. This was like the breakout point. This was like the halfway point. So it went low. It starts accelerating, but then it's only like, how do I know where the middle is then? It's not that point. Could just be that that's the middle intersection. Powell pump. It seems a little slow, but maybe there's a possibility that that's not actually where it's going to go up. Maybe there's a better way to do it, which is to use that as a middle. You guys are like, well, that's way out there. Yeah, I know, it's super slow. Well, that is what happened here, though. So once it came back and tested that, it kind of took off. It still went really far. This is May 7th. And then May 10th, it's like a quarter of the way through here. It's like splitting it into quarters. It's a really strange way to do this, but it might make sense because this is the high, builds out, bottoms out. It's just really slow. I don't know how I feel about that. Well, you can make it how you want to make it, or you can just do the right thing. I'm going to keep this on the back burner, but I need to kind of clear up the chart a little bit of congestion here. Well, though, here's a thought. What if so this build out's easy. This is just a simple jump, push. Once it gets to that marker, it makes the push. So the second push-up ends up being incorrect, but the first push-up is actually pretty darn close to an S-curve here in and of itself. It's always like a halfway one. So if we were to use only this one, well, we would have thought it would go here, but it never does. It doesn't make it. So it does retreat. I'm imagining this in terms of layers and where those layers might be. I'm watching GME and AMC, by the way, on the side of my screen here, and GME is at 23.59, AMC is at 4.66. What I'm trying to do is, as best as I can, There was a weird like wick right there that goes to like the halfway point. Yeah, it's super similar. And then if you ignore that entry and you only use this, ignore that and just use the tops, it is definitely a back test on that top right there. So I think we're missing that back test. I definitely think it's missing, which is sort of what I was at before anyways. Yeah, frankly, there's not really much to say about it except it's just not there. I'm trying to see what if that angle matched up. Not really. No, it did. All right. So here's what I'm gonna suggest to you. I'm gonna suggest that that target, while it may not be met because of the timing here, it may be, yeah. Let's check it out. Let's see what that is. This is building out like a huge pump. So that's pretty darn low. That would suggest that you could come all the way down. It would take a long time too. I know it's a speculation. I get it. I treated it like it's its own range first. I didn't want to like put my own bias in it. It's almost like a 50-50, so it's almost like a perfect up and down cycle. So the expectation would be this could go pretty fast. See, it would be like done already. If that was really the top. It's too fast. So instead of doing that, let's use I'm just checking something. I know that the ETFs tend to be very consistent, so I want to see if this one's been doing that lately, and it seems like it. That's pretty darn close. So this is 113. They tend to be a little better than AMC and Junk in this regard, even though AMC is pretty good. I feel like the ETFs have been really consistent. That's not the right number. It's supposed to be 113. Steeper. I mean, it's tough to say because I don't know where exactly the middle is, but I think it's there. So as the crow flies, the suggestion would be this could come all the way down to 206, which is kind of a relevant level. Is the gap level on August 15th. It's been important for support throughout. That would look like a breakdown too. But then where would you expect it to do this kind of reactive move back up, if that's the case? Pretty much back to this top. Back to here at 222. Just a massive push up. And where does that come from? That's kind of a macro cross. Didn't quite make it there till the end, but it tried to get up to the. So this ends up being more or less like this ends up being like a pivot, not the actual top. So it's like a pivot here on May 3rd. It does move before that point, so that would be like us saying it gets to the low before October 3rd, which is very similar to what we're saying on AMC, because I was looking at that as a potential low. So no matter where it goes, it's kind of like, yeah, it gets down there wherever it's going to go, whether it's as low as 206 or if it only goes to 212 or 213, it gets there by Thursday, not Friday, and then starts moving out. It's pretty close to what we have here on AMC's big picture, maybe here, so we'll see. So in the previous setup, the comparison, this is like a really big version of like a really small thing that happened earlier, basically. And it's just a comparison. Yeah, right after that, on May 3rd, when this pushed up, May 3rd it broke out, and then AMC, that's where AMC kind of rejects and starts heading down. Like there was a move up, but it didn't continue after that. So the only major difference is that this jumped and then AMC just didn't. They both move up at the same time, but AMC didn't make the creek jump, whereas IWM did. Then it hit low. So this would have to be a different kind of argument, because then you'd be saying, well, it already did that then, blah, 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 blah. And then where the heck are you going to go on AMC? Or another alternative here is that, just trying to think about how this works out big picture wise. Another alternative here is that this has already happened. And this is where the breakdown was, and there was a cross. So somewhere, so instead of saying it's going to happen future tense, maybe it already happened. And May 3rd, that kind of May 3rd event already happened back here in September. Somewhere between the 9th and the 16th. That's interesting. So the 9th through the 16th on IWM was like a pit. It's when it went low and then broke back out. But the 9th through the 16th here, it was already in like a top. It wasn't a pit. It wasn't a low. It was a highs, two highs. So it's like the same down and up action, but for IWM, it's breaking out of this creek. It's doing a creek jump here, and it did it on Friday the 13th. And AMC doesn't. Friday the 13th is when AMC stops and then drops. It may have already had that moment then. So I'm kind of thinking about this as three-dimensionally as I can. I'm trying not to pigeonhole myself into thinking it's future tense. I think they already had their May 3rd moment. I think it was Friday the 13th, because that's when it pivots down. So AMC's already been doing this downward motion here. Yeah, right there. It's already going for the spring. It's doing that thing from this point forward. So Friday the 13th, spooky, huh? Friday the 13th. That's a pretty important marker. I don't know why I didn't consider that before. I mean, I did consider it, but I didn't consider it in relationship to IWM. So on Friday the 13th, IWM makes the jump, and starts its advancement. AMC rejects the jump, does not make the jump, and starts its fall. So it's comparable to what happened, very comparable to what happened back here on May 3rd. I mean, it's almost identical. This is right where IWM on May 3rd, AMC rejects the jump, heads down. And on May 3rd, again, this is important because it leads into the bigger run-up. AMC rejects that down, IWM makes the cross. So, what remains? It still feels proportionally out of whack, but I feel like it's missing that pullback here. So, all right. Anywho, I don't want to go any more further into that. You guys are like, what? You went through all of that? Just give up. I didn't give up. It's just that I can't really be sure about sizing. Like, there's evidence here that you may be done and you may just take off. I can see how that May 3rd event looks like it already happened because this definitely crossed over. This jumped the creek on the Friday the 13th, and then AMC did not. It rejected the creek jump and went low, and that's the same thing that happened here back before the May run up. AMC headed down away from its relevant creek. It rejected on it and headed low, like it's going down for liquidity, pushing the ball underwater, right? Spelunking, as I said. And IWM's kind of already working its way out upward. The difference is that this already had broken out on IWM. It had already made an SOS locally. Like it had already jumped the local creeks both horizontally and diagonally. So the comparison kind of breaks down there because it's like saying, it's just not quite right, you know? It'd be like saying I guess it'd be like the S-curve is like halfway over on the 13th. Maybe. Then it goes into October. So the expectation would be it's going to maybe follow this trajectory down till it hits whatever it needs to hit before it takes off, and then just takes off. But it lacks the distance. It lacks the overall big picture kind of check. It hasn't done it yet. It's just not there. It's a very easy to debate, like, well, I don't think this is the same because it hasn't come down. It have to come at least to 212, at least, and that would be just to make that back test because I just don't see it. It hasn't happened. So in theory, one of the places it could stop is 212, and then it just takes off. Again, Thursday being the low, and then next week it's just going like crazy. And it finishes part of the move, but not the whole move. It only goes up to like, honestly, it probably only goes up to like 235. And then it finishes by kind of climbing up the rest of this S-curve here. And that's it. That's your S-curve right there. Yeah, I mean, that works. And so the S-curve terminates at like 252 late October. And then the question is, well, where is AMC during all that? And I don't know if there's a good way to do this because I think the argument breaks down there because it's like, essentially, as this is pushing up, AMC is going down, and then it plays like a rapid fire catch up on the 10th into the 13th. It may very well be the same here, 11th into the 14th, sort of that first week, which may have to do with options. So the first week terminates here on the 3rd, and that's breaking out, and then it takes a whole nother week, just one more week behind, and then AMC goes. So if that happened, this basically finishes its pullback this week, and then it goes and starts taking off. And then the next week, it's probably that simple. And then the next week, Monday the 7th through Friday, it's Monday the 14th. AMC would be like wherever it's going to be at its low and take off, assuming it just keeps iterating down. And it doesn't even have to be like low. It could be in a different position. It's just that it hasn't left its range yet. AMC didn't leave its range, regardless of whether you think it all happens at once and just takes off all at once. It's not so much about it necessarily being at the bottom, so much so that it is, because yeah, I mean, on the Friday the 10th, it's definitely at the low, but in theory, it could have been different. Like, it could have built out over a longer period of time in a run-up and been in like an SOS on that Monday. It still could have broken out much the same. Wouldn't have mattered, right? It's just an opinion about where it is. So if this is going low, you think, oh, it's going to be done on the 7th, but in reality, it takes the extra time to break out. I bet you this is the move it makes too. This is the S-curve move it makes out here. It pushes, that first push. That's really close. That looks good. Yeah, I mean, it follows. I mean, it could be just super fast. Maybe I'm just getting everything slightly off, but there's the dump, so it's happening. That's what I was suspecting, which is, I mean, it's good for me anyways. I was just thinking it might be going that way. So this could potentially pivot early, and then by the time it gets to the 14th, much like what happened with AMC, that's where it takes off. And then it's another week, right? It's like one more complete week to Monday the 15th, if I'm not mistaken, or Wednesday the 15th. Let's see here. Monday, it's like 3 days. It's wherever it hits the high. It doesn't really matter if it's here or there. It's wherever it hits the high here, around that 50% mark, which is a challenge. That's the challenge here. That would be difficult to do. It would potentially go higher than that, but it would just be doing it. So where is that mark at? Don't know. I'm like pretty darn positive about that. So what I'm doing is, instead of comparing it to this breakdown level, I'm basically comparing this whole thing to this flag that happened here, doing that same comparison. So basically it's like this little flag basically repeating itself again here to get the second push. Kind of makes sense to me, but I'm thinking about it in a lot of different ways as to why that would be the case. So what's complicated is I don't know where, this is where things get kind of messy. I still haven't really been able to figure out where that middle cat ear is. I'd have to say it's here. It's in this little guy, this little pocket right here. So at the end of all this, this would be the low between the ears. Maybe that's the reason why it went that low and then didn't continue. Maybe they're going to use that in some extended hours move. Like that 415 we were talking about earlier. It seemed a little contrived to me. If this is the mark of the low, this is like the low of that wave, and it is. We know this is where it crossed down and came back up. We already knew that. It'd be like this area here. Crossed down and came back up. This is breaking through the main uptrend, right? So there's that. And it's the same thing that happened here. And then it rejects on the main trend, moves away, and doesn't do the creek jump till the last possible second. Then and that's the middle. That's like the center mark on everything. One, two, middle, one, two. It's a little confusing. Doesn't look like it goes very high, but the trick is that this 50% is the top here. It's not, so it's like a way of triangulating the move. So it's either, oh shoot, I don't know where the middle is. And now we have a debate because I'd have to look at this as where's the, I think it's, I'm just gonna have to go with the most used one. This is multi-wick area at 572. So in theory, what this means is that that's the bottom, that's the middle on the 5th. That's why it hit that weird low on the 5th. That would explain what that's about. So the middle's on the 5th, the bottom's on May 31st. May 31st. It shouldn't be May, Buxy. It is May 31st. June 3rd. Which means absolutely nothing on IWM. But maybe it does. I mean, maybe there's something else to that. I don't know. I just got to look at it the way it is. I don't really understand how else to see it, because that is the bottom. It would make sense. And then this would be like your double M 1 2, and then the cross 1 2. It also terminates on October 7th, which is again lining up with everything that we've seen here, or October 4th. It's consistent. I'll just say that. Depending on how you draw the middle, it could even line up with this move all the way up to 830, 840. It just sort of depends on where you think that the 50% marker is. Like, I could do it in a couple ways. One would be more conservative at like 540. Another, which would put it at 719. So let's just mark these off real quick. And then I will have to keep this box. And then the other would be a little bit higher. That's 798. And then the last possible one is really, really high up here. It's like 868. Seems a little out there to me, but okay. So those are like the 50% markers. If you're going up and you're marking up off this range 50%, like up to the SOS and then up again from the lowest low. This is consistent with the way we did the PNF as well. And then what you would look for is you look for a, because that doesn't actually give you much of anything. All that gives you is maybe where the next floor might be or the next ceiling might be. So it's the idea that you're establishing a range, and that's where your target is for the next range. So your range target's on one of these three levels. And I'm betting that if we went back and looked, they probably all make some sense for some reason. Yeah, okay. So like we can go back and speculate about why that is, but I think it seems pretty obvious. that they are exactly where they need to be. So the next top range tops are going to be here. I don't know which one is the best one. Um, I think the middle one is probably the safest. It's like $8, so $7.97. So what that means is that it kind of makes it seem like it would need to be at that point at that time, though. Like if that's the low, then it should be there by the four. It should be there this week. So why am I getting it wrong? Yeah, that doesn't make sense. I can't be there this week. It's too early. Did I pick the wrong low? Maybe I'm supposed to be picking from here? I don't know. Maybe. That doesn't really change much. It just changes it to like the 23rd. Makes it really high up. It kind of looks like the waveform, doesn't it? Like, it looks like the halfway point on the wave when we do it that way. It's almost like the same marker. Almost. It's really close, huh? Well, crud. So if we go to May 15th and then we add that back here, it's very close to that, to matching up, probably because of the rise over the run kind of principle here, that you would see this waveform here and then come back up and hit a high October 24th, not earlier. That's very inconsistent, I know. So two really, really different outcomes. One is, again, like this week, which doesn't really make sense to me. The other is October 24th. So the idea is like you're pivoting down while IWM is already up. Let's see if October 24th makes sense. Oh, that's the same number I picked. October 24th is the cross up there from the low to the potential high. But here's the thing. AMC doesn't actually move into its high on that date. And what happened last time is that it actually went earlier than that date, the 15th. It went on the 10th. Or went on the 13th. And it only took 2 days, but this is a bigger setup. So in theory, it seems a little bit out there, but in theory, it's almost irrelevant because you could come back down. That's actually what happened here. It actually came back down on that date. And IWM was hitting its top on that date, but it it kind of follows, to be honest, because then it'd be like the 14th through the 28th. So basically, that pivot point, instead of being here, it's a week late. It's on the 14th. October 14th. I don't know what it looks like exactly. Maybe there's some other extra chop. I don't know what it is. Or maybe it's just taking a longer time to build out. But whatever happens, it basically doesn't take off completely until the 14th. So that could be enough time to get into an SOS and work it out, which is more accurate anyways. Or we could still be low. Doesn't make any difference. But then the 14th, you really take off from that range. You do the big 50-50 sweep from the bottom point, which probably is around 430. This is how you, or yeah, this is really nice. 430s. This is how you get to the target price. So this says 22. But P&F said, what was the average P&F? Like 16 something, 1632. And would be fair because there's a more conservative target value. You guys are like, 22 books EC? It's going to happen. You found it. I did find it. Took you long enough, man. Well, that's one of them. The other one is different. It wouldn't be that different. Would it? It'd have to be... That's just a 50-50 anyways. Probably would depend on something else, because I have to look at... Hang on. That wasn't a 50-50 retracement. It actually went higher than 50-50. It went way above. I don't know if it really matters, actually. Because that went significantly above 50-50 here. I couldn't say the same thing in this particular time frame. I know I'm stubborn, but it's like I'm trying to think about how can I make an argument about that if it didn't actually do that. I'm not really sure. I could. It did not. I guess for the longest time, I've kind of felt like that waveform would wrap, and it did here. It did wrap around that trajectory. So you have this like long-standing idea, and I've got it here, that if you go into a slingshot, that you basically get like a 50-50 wrap around whatever trajectory it's kind of building away from. So then when it comes back, so in this case, back in April, AMC moves down to 280s or whatever it is, away from 350s, but the trajectory at that point is way up at 480, and then it does like a 50-50 wrap. But that's like a conservative estimation, and it's not really like the only estimation. There's a lot of different ways to do it. It wouldn't have never come above, so if you only did it that way, it wouldn't have come above 496 or whatever. Or excuse me, it wouldn't have come above $9. But then we have to look at like the big picture and say, well, why did it come above $9? And we already kind of talked about all this. It came back up to test these supply levels. So yeah, I think there's a possibility it could come pretty high here based only on the 50-50 alone. I'd probably put it at, if it took off on that date of that's like kind of the middle, you'd take it and you'd put it here. It'd go up to like 1854, because that's the 50-50 around the marker here. In theory, it could go way higher. You'd have some kind of interaction here around $8 to $9. That's consistent with what we've seen before. And then that's pretty close to the P&F targets. We got three. One was 1496. One was 1706. They could increase if this takes another week to build out. So it could end up being closer to 18. But it does make sense right here in this pocket. Doesn't really make sense for these trajectories over time. That doesn't really matter because those trajectories don't have to be met, and then it comes back down, actually comes down and hits 950s or whatever targets we have for the retracement, which I guess for us are like the 8s. So it comes back down and it reaches back towards the 8s here, and this ends up being where the this ends up being essentially like where they camp for the next range, right around here, which is consistent. And it's possible you spend a little more time up top as well, so we could keep that in consideration, but the distribution might take a little longer. which would account for the extra time that we have, because there's like an extra few days here that we didn't have last time. We only had like 2 days last time, so it almost doesn't make sense. So I think you could still consider this a blaze through the 9 or the 7s and 8s, but then when you get up to the top, you may spend a little more time before you drop here off of 15 or so, and then come back down. And then you camp back here in the retracement. I'm sure it's some kind of Fibonacci retracement too, but I'm not going to go look for it. So basically, when you come back, you pass through on the 24th, you pass through $9. It's not the high, but it's where it hit when it comes back down. That would be the most consistent thing. And then presumably, IWM is actually hitting its high there, but it's doing it after making an earlier advancement. So it moves before AMC moves, possibly significantly before. It could move next week. It starts taking off, and everybody's all upset because it's not moving together. And then AMC starts taking off on the 14th. And then this is actually where we see AMC shoots past the others, shoots past IWM, the ETF. So they basically cash in their chips on the 14th and then let the FOMO run it back up to the top. But then you basically are seeing like a swap. They're running up the rest of them. So it's like a halfway kind of 1-2 movement potentially. That's what they did last time. I mean, we can debate it, but that's essentially what happened previously. So weirdly, yeah, it's weird too, because remember the other analysis we did, which was like to talk about where these two have where they're potentially intersecting their creeks. It actually was, remember, it was the 18th into that following week, the 22nd. So that's pretty fascinating, because there's an intersection right here at that same time period. That's really quick. Ooh, so I think it's going to be fairly similar. I think it could be like this massive squeeze moment around that second week of October. Its potential is very strong. Not second week, it's the third week. Monday the 14th. Sounds like 2 weeks, 7 and 7, but it's like 3 weeks away, right? So, hang on. Let me double check. So today's Monday the 30th. And then we've got, no, it's not, it's 2 weeks. Monday the 7th, that's a week out. And then the second Monday is the 14th. But then the next Monday is the one that I'm curious about. So it's like by the third weekend, it potentially would be moving and or about to rocket, because it's complicated. I think it's the 14th. I think it's the week of the 14th. So I think October 14th is when it's going. That's my best setup right here. That's all I can offer you right now. You guys are like, why not now? I just don't think it's now. I think it's building out like it should be building out, but it's not, the way it's timed out is too slow. It'd have to make this move back down this week, and then you lose a whole week. And it looks like it would just take off and pivot on the 7th. But I'm finding that to be a bit inconsistent, because I think that IWM will take off first. And I think we're going to see a delay. It's not based on anything except for what happened last time, which is that technically we were already behind IWM. It already made the cross up on the 13th, Friday the 13th. We went down. So like in theory, it's already jumped, you know. Maybe it's already doing this kind of motion, and I'm just like, everything's off and I'm just a little bit off, and everything's really going to go this week and then the following week. You know what I mean? So, but the only way to prove that would be if IWM took off this week. But the problem with that theory, this is where I got stuck a minute ago. This is why I went backwards and did it again. So I had this kind of idea that they looked like they were already happening. It was like maybe it was going to happen in the future. So I tried that first. And then I was like, that doesn't really make sense because of a number of things that have already happened. Like the Friday the 13th cross already happened for IWM. The problem is Friday the 13th didn't have a backup yet. So it went up, but it never went back down. So there would be an expectation that it would come back down. So I'm looking at this and I'm like, well, trajectory-wise, it doesn't look like the back down would happen anytime longer than this Friday. Because, like, that's where it is. And that's how it built out on the other example that we use. I'm like, it's a wave. It shouldn't be that complicated. It's not that complicated, guys. If it breaks down, it's going to go down the same trajectory. It's going to have that target. So it's like it would get there no later than Friday, but it would be at a low on Friday if it did that. So it's missing a move. It's just missing it. It's not there. There's no back test on this creek jump. Now, some people will probably argue about, and I argue with myself enough, right? For the lot of us, you guys are like, you already do this with yourself enough, dude. I wouldn't argue. I could probably make an argument because I'm looking at RSI and junk, and I'm like, you could probably make an argument that maybe it's already happened. Like, there's already been enough of a back test here. It's checking, and it doesn't want to go lower. It's doing like an SOS kind of move around 221 or something, you know. But it still looks semi-distributive to me. It hasn't jumped this creek. I feel like just on the basis of that and the way it's set up, it still has more of that vibe to me of distribution right now, just the markers of distribution. It hasn't jumped back above 223 specifically. Like, that's a big deal for me right now because that was the top over here. It's like, it almost looks like it's just kind of pressuring underneath, like it's ready to get pushing down. It's doing like this double cat ear nonsense. So I guess I gotta go with my gut here and say I think it's gonna go down. Well, that presents a problem because then it's like, you can't go back to that, go back to the future. You can't go to like the future mode where you think it's going to happen in the future. If that's the case, it's already done the jump and it's just doing the back test. It should just be taking off then come next week. Like, IWM should be in a rocket launch mode by Monday. It should not be any longer than that if that's the case. If I'm right about this needing to come back down, unless it's just going to build out really, really slow, right, which I can't control. But it almost doesn't make any sense, okay? So I'm looking at this, and I'm like, all right, one of two options. Either it's now, and it's doing the backup, and it's going to just go, and it's going to hit a high on the 7th, or try to hit a high on the 7th, or it's backing up now. It's going to go next week, and it's not going to hit a high until like the 24th. Quite a long time, but that's just the way that the 50-50 breaks down. I like to do 50-50s on the creek cross. I think it's the best way to do it. I think it's a fair way to do it too, and I think it's reasonable. It doesn't give you like ridiculously fast trajectories or ridiculously slow. It's straightforward. Jumps the creek, should be able to build out, push out. Usually it's about a halfway point for the S-curve, and it looks right to me visually. So that's always a big plus. Like, this to me looks like a very strong possibility for the major move out, and it could include that move down to check the creek for sure. It just looks right, and it looks a lot like what happened back here before the May run up for AMC. So if you're still tracking with me, that was the logic that I'm using going forward, and then I'm looking at the big picture, thinking about some of these other jumps that need to be made. Like, there's a marker right here that would need to be jumped. There's obviously this wave out right here. That measure is correct. It does measure from top to bottom here and then bottom to top here to be about the same. Everything about it looks good for a jump, wave jump with an outward motion here. Everything checks out. Timing kind of checks out, being that it would take off kind of the first week of the month. Targets are pretty close to right. Kind of makes it seem like it wouldn't come that low. Like, it may only come down to like 215, not Just again, eyeballing it, like not actually come much lower than that, which is interesting because I think the gap's there, but whatever. But maybe it hits that EMA or something and just takes off. So all that works out, but then you look at the timing of that compared to AMC, and they were asynchronous. Like one went first, then the other, and it would make more sense that the following week AMC really goes. The debate, of course, being like, well, why that doesn't have to happen? They could just run all together, keep people on their toes. Well, so far it's panning out. That Friday the 13th jump that happened on IWM did not happen on AMC. It hit the top and rejected, and that's exactly what you would expect if they're going to kind of if they're doing like kind of the same thing. And then it's been pushing low, just like it did back here on the 3rd. So I'm building a presupposed breakout based on what happened here on Friday the 3rd into the 6th, of May of this year. AMC goes down to go to get the lows and push out, and then IWM's already taking off. And that's what we're seeing. Like, it's kind of doing the same thing. The difference with this one versus that one is obvious. This is a much longer period of time in terms of the setup. So the build out is slower, and therefore the time it takes to get up to the top equally should be proportionally slower. And I think it is. I think the fact that it wouldn't take till October 24th seems like a really long time. In reality, that's like 20 days. It's not, 20 trading days. That's pretty normal for a big move. And the other thing about it is that AMC does hyper-extended moves. So it's not like IWM where it just coasts up into the top, which is still a big move, by the way. I mean, it's still, percentage-wise, it's a pretty huge move. It goes from 215 up. That's a 20% move. But AMC supposedly, it does very similar things as it did last time, whips around kind of the center mark and then comes back to it. So basically it goes up to between 790 and 9. That's the center mark area. Breaks out and then does a double. This makes sense because the PNF's up here around 17. And then it retraces back down. So it hits... and it has to get back down by the 24th. So it comes back down to $7 or $8 by the 24th. And then that starts a new range build out, essentially, going into November. What's kind of interesting here is that there seems to be potential for a late rally to go back and check these creeks again come that same time period. So there's already kind of like a built-in possibility here that this is the range potentially based on these trajectories and junk, and we could keep going, that this could come back up later and check them again in like another rally into January. And that's the one that everybody keeps thinking is going to be like the big one, right? It's going to explode to the upside. Could be. I'm not saying it won't be. I'm just saying it could be. But this to me looks really simple. Like, I wish there was more I could do to prove it. Aside from just my ideas about moving away and how when we iterated through here, we kind of broke down and started moving away. It's basically pitch perfect for what we want to see. You can see visually too on the RSI here that breakdown going right across the middle. I mean, it's pretty strong. Yeah, I mean, it's a pretty strong connection between the events that have happened. That potential is there for sure. Like, the only thing I can think now is just maybe trying again with a lower trajectory. I don't know if it really changes that much. I mean, it would be significantly lower, but I think that's like a 50% of the 50%. It is. So that's a proof to me, because a lot of times that build out tends to be like that. So on RSI, it looks like the wave is middle is in the right spot. on August 5th. But then it looks like this is the ear over here on the 9th, as opposed to the way I did it the first time where I'm measuring from this kind of centerfold over here. I'm measuring a little further out. And that ear is always really important. But you can see it looks like it's blocking off the halfway point on the halfway point. Like it's essentially a quarter system. It's exactly halfway to the halfway. You know what I mean? So like if it goes up to this marker here at 630, it's exactly halfway up to 880. So I think what we're seeing is that's roughly like 630, 880, 17 to 18. Those are roughly like your halfway points. Makes sense. I mean, it's like 17 or 18. Those are kind of your key numbers. Up, up, up. It's always built that way if it's going to break. So what do we do between now and October 14th? Man, what if it's not until the 21st? That would stink. It could be. It could be like it just rockets just the 21st and then it goes back down. It's another like 3-day event. It seems a little ridiculous, but I guess it could be the same. I mean, that's a possibility. We're just low until here, and then it does that silly, like, really fast whip, 100% day, you know what I mean? Like, 100% day kind of thing, and then it's very close to what happened the first. It's too close in some ways to what happened the first time. I don't really like that. I guess it's a possibility. So that's one. That makes sense with triangulation, why that might happen. The other thing is we can use this to help build out a simple to understand, almost like an inverted head and shoulder. And what's usually good with that is inverting the chart. So I'm going to invert the chart. It usually helps visually to see it better. I have a little bit of problem sometimes when I'm looking at it upside right, just to kind of keep it a little bit unbiased. Yeah, so this is like a double top motion. It's essentially like a UT inverted. If it went back up, if it goes down to 435 and breaches that, you can see why that might happen. If it jumps that creek, heads back up, or in our case down, and then reverses, you've basically got like a double top here. And then this thing kind of just takes off. So there's a head neckline at $5. Why do a head and shoulder? Because head and shoulders are good for timing, because oftentimes the timing of the head and shoulder is pretty close. Not perfect, it's usually pretty close to about the same distance. So then where would the neckline would be at, I think 5, and then you'd have another break here. Yeah, because it takes off from here if that's where it hits. It's basically the same exact spot, so it's flat. The shoulder would then have to come back to 462 again. So that's a debate. All right, we're just talking about possibilities though, Booksy. We don't have to keep this like super scientific. And then it could break out after that Friday. That's kind of like the long-winded route we were just talking about, because then it would break out like last possible second. You stay really low, and then it would just start ripping on the 24th, basically, or the 21st. Just take off. So that's a 21st takeoff date. I don't really like that one as much, but I guess it could happen. in order for that to be successful, well, the only thing that's really required is that you like hook here. So I guess it doesn't really matter. All right, the other option is that it's more of like a, maybe this is like an LPS or something. I don't know. I'd have to go pretty fast. I don't see how I could possibly get down there any faster. All right, so let's start from Monday, the 7th. Well, the other option is that it's a low head and shoulder, kind of an inverted one that stays really low. It still looked like it was, oh, I see. The only difference is that it's in the SOS already. Ah, so that's the two potential right there. So in one case, you basically just like take off from really low. You take off from 5. And it just takes off, it gaps up probably all the way to like 630. It gaps up to like 630, and then it drops down, does a creek test, back test on like 540s, and then it just goes. That's like the rapid fire one. The other one is more of a rising head and shoulder pattern. It could take off a little bit earlier, maybe even before Friday. If it can hit low enough, it could go up high. And see how this shoulder's set up low here? If it's rising, it could set up higher on this side. So instead, this goes up past 550, which is fine because it would need to push 550 and come back down to 5. But then it just takes off and it's already in like an SOS come that Monday. Very similar, but a little different because of the way the build out. And either one of these looks right to me. I've seen AMC do both. I've seen this kind of rising head and shoulder breakout on really strong moves like this, like your move that happened in June when it broke out. It went up high and then pushed out and went pretty far. And it has that kind of rotation to it. So that's a possibility. The Monday, the 14th, is where you take off. And then into the 24th, you're really just building out a giant SOS. So it's just a slower process. And both of those look right to me. So it almost doesn't matter. I guess the only difference would be this week. So this would kill people on max pain. So for the that's probably going to be the difference maker, right? So like Monday the 14th is your options chain, because Monday the 14th, if their desire was to keep the price below 5 and maybe even at 450, shoot, like it could be as low as 460 that Monday or that Friday. You definitely could see this as the backup to the creek lower going into that week. So this would keep it between 430 and 450 on the Fridays. 460 on the Fridays. So if you wanted 2 Fridays in a row here where it's at 450, this is how you could do it. If you want, it's so funny how like it doesn't really matter because it would be the same either way, more than likely. If you don't care about that, you don't mind a max pain of 5, you can go to a max pain of 5 on the week of Friday 11th. That's a way to get that. So it wouldn't make a huge difference this week. This week probably still be at like roughly 450, but then you could take off and be at 5 the next week. More of a gentle ramp. Both of those work exceedingly well. We have one trajectory right here that's currently being met. This one would suggest the steeper path. So that's the one that we just created today. We did it by coming back up to the top. So we had this ramp here. We came back up and checked it. We're going to move away from it. It's kind of like a micro version of what we're talking about on the big picture. You basically, if you push away from it now and you can't hold 460s, then it goes back low. And then basically you go down, you get your spring, and then you kind of ramp back up to it to try to catch up to it over here. Similar, right? Very similar. This is more of like an LPS kind of situation here. Yeah, that works. Oh, it's really good setup. And then the ramp up, the intersections here are pretty solid no matter what you do. So on this one, there'd be like a secondary mark down here. We may already have it. Usually the between the ears mark is one to use. I think that's a good one, but this one could be there as well. This guy. Both of those look good to me. Yeah, they're both really solid. I like both. I don't know which one to pick. Yeah, they're both good. So, man. Yeah, and that doesn't make a difference which one you pick because they both triangulate to the same spot. It's just dependent on really where you are on the Fridays. So, the only thing that would really change this is if we hold 462 now, that's the same as last week, or if we break significantly below 433. That's it. Everything else looks ready for go. Yeah, we're about to have a really good month, I think. It's just how it's playing out. I think because October predates November, I think that's probably going to be the exception right now. So if this weren't an election year, maybe October wouldn't have a great reason. Septembers are usually kind of bummer months in the market. That's historically, it's like one of the lower months, less gains. Octobers are kind of so-so. They're not, I don't know if they're great or bad, but they don't seem to be very significant unless it's like an election year or a midterm year. And sometimes you see that set up in October really plays into November, one way or the other. So if for example, for everybody for the last 2 years has been saying that the election, if we ramp up into the election, well, the final month to ramp up into the election will be October. So the pricing in would be happening in October, and then election could be like a rug pull, for example. Or the pricing in terms of like a spring in October, setting up for a big boom in November. You have probably one of the most major and consistent market catalysts that exist in the U.S. market system, which is politics and the 4-year election cycle. It would be very difficult to think of another one that has as much long-term consistency and significance. I'm not talking about like Fed decisions and stuff, just in general, like something that happens consistently. Well, every 4 years you get a new president, or you get a president reelected. That's supposedly going to set up the fiscal policy for the next 4 years. So, do I think October would be a really good month to make stuff happen? Sure. That's why it would be special. November itself, we can wait. I honestly think if it's already up there before elections, it may be a rug pull moment, to be honest. I've looked back at other election seasons. They're usually very bullish the year leading into elections, and then sometimes they maintain that bullishness, but there's usually some chop. There's usually quite a bit of chop around election time. It's not like, oh, election happened, boom, or dump. It's usually like there's a corrective move, and then the market adjusts and continues. That's the only thing I could really see when I went back and looked. I'm like, meh. I don't really see any single, there's going to be people, pundits out there, articles, read what you want to read. There'll be people who say, this is what always happens in an election. This is what always happens in an election. This is what happens to this. I think the data is good. I don't think there's data that's bad, really, unless it's just made up by somebody online. If the data's there, it's there. A lot of people will say certain things about certain political parties and how they affect the market. All I know about this year is what I've already kind of talked about. Small caps, have tended to benefit more from Republican candidates because they're a little bit more, you can say, pro-business. That's not necessarily 100% of a truth. It's not an untruth. But they usually give a lot of tax breaks to businesses. So businesses tend to do a little bit better as a result of that mentality. Whether or not that actually happens or not, I can't you know what I mean? We could go back and look at every single political candidate ever. I'm sure that there's been Democrats who have given tax breaks to small businesses or things like that. But I'm just saying, like, on the whole, that's how the market would probably interpret it. And I'm not seeing any inconsistent information about that. So if you get a Republican candidate who's promising business tax breaks, then it's going to be perceived as a bullish thing for the small caps and for businesses too, but especially for the small caps, you know. And that, you know, like I said, benefits maybe different sectors. Like I think, clean energy has largely been better off with Democratic candidates. They do a lot of, they help those businesses because they want more clean energy stuff. So they give tax breaks maybe, but they do a lot more incentive programs for the individuals who buy those things. You buy solar, you might get an incentive from the Barack Obama administration to get a rebate on that. Whereas that rebate may not be offered during a Republican era president. That's just the way it is. So like you can see why that would improve certain sectors and certain treaties. And you got Trump who's talking about tariffs. How is that going to impact businesses? I don't need to go through this and outline every single thing for you. Do your own due diligence about it. But that would be the major catalyst of October would be election poll results. There's a large indifference right now, meaning there seems to be poll results seem to be pretty uniform or mixed. They don't know yet who's more likely to win. That could be impacting the nature of the market right now. And if anyone tells you that politics don't matter, they have no place in the market, they're not telling the truth. Okay? You can be apolitical and not be super defensive and angry and argumentative and present it in terms of economic policy and how that might affect, and just talk about it in theory. You don't have to take a side. Okay? And it doesn't have to be an argument. It just doesn't. And that's the way that I'm going to be on it because, first of all, I'm pretty moderate anyways. But second of all, I don't really think it needs to be like the forefront. We don't have to discuss every single policy, that exists. We can just kind of keep it focused on generalities and what the market expects because we're thinking that that's being priced in. The market's supposed to be future thinking. All right. So you have to think about fiscal policy and how it impacts businesses. That's what the stock market is, all right? And it will be impacted one way or the other. I'll just say this, maybe to cap that off and just leave it alone. Traditionally, in just over the course of U.S. history, no one would argue that this hasn't been a bull market. It's been a bull market, even in the midst of recessions and things like that. There's been recovery, and largely it's been a bull market throughout the last 50 some odd presidents. You know what I mean? Like that hasn't really mattered that much who's in office, because over time the market's still grown because the U.S. economy it benefits from, I think, the duality of the system on and off. So I don't really think long term, I don't think it's going to matter that much. But like short term, sure. Like the next couple months, yeah, it'll matter. Perception is everything. Perception will be reality for a month or two here. And then it'll kind of ease back into like, oh yeah, this is just the way that the world is. And if nothing crazy happens, then I think the bull market can persist and continue, even in the midst of like breakdowns and stuff. That's just a very simple very simple man's understanding of it. I don't think it's wrong. Like, even the people that think we're going to have big market correction, they can't look back at the market and say it's been a bear market. That's just not true. There's no, like, it's not possible. It's one of the most commonly accepted things. So unless there's some kind of major, huge problem that comes up in the world, it's just no reason to think that it won't be 20 years from now, it won't be a higher market. It just doesn't make sense. So let's say we were to take off from here. Where could it take us? 7, 8, higher? I feel like you don't listen sometimes, Wasted Memories. I feel like you're not listening to what I'm saying. I just did a huge analysis on it. I like you here. I don't think you need to leave or anything. I'm not trying to be mean either, but you ask me things that I'm like, given the answer for it, I don't understand. Like, have you been here this whole time? Trying to be nice, not trying to be a jerk. I'm really not. I know it sounds like I'm being a jerk, but I genuinely don't understand. Like, why would you ask me that question? I just went through it all and laid out. It doesn't make any difference if we take off from here or 434 unless there's like another. If anything, the longer it takes, the more upward momentum we have cause for. But like, it's not going to be significantly different over the course of a couple weeks here. Like, the PNF for this range is as already stated. It's between. I feel like a broken record because you're making me repeat it again, and I can't really see your timing on that was not that long ago, so I'm confused. Are you like jumping on and then jumping off and then jumping on and then jumping off? I don't know. I just went through this. The PNF for this is 1496 to 1706. That's it, period. It might grow a little bit in the next couple weeks, but that's about it. I'm not going to give you guys another target. Middle of that is around the 8s, to 7 to 8s. I just did my analysis, spent a lot of time doing it, so I don't think it makes a lick of difference if we go for a spring or not, except for the purposes of liquidity. I can't answer the question. And you're like, well, if it makes no difference, then why? It may make the difference to somebody that wants to buy in here, like an operator, but it doesn't make a difference to me. And to our price target, unless there's like dramatic shifts in value here, it's not going to change the point and figure of it. And it's not going to ultimately change the outcome as a result. So it may make a difference to somebody who's buying or selling, but it doesn't make a huge difference at the price target, whether we go down for a spring or not. So taking off from here, taking off from 4s, 430s, doesn't make any difference. Right? It just doesn't. So, all right, I think we should wrap it up. We got like 45 minutes left in the day. I've had a pretty decent stream length here, I think, going on for, I don't know, 3 or 4 hours now, maybe. Started at like 11 something? Yeah, about 3 hours. And we usually hit like our peak viewership and then kind of die out the rest of the day. And it's not about how many people are in here. It's just about time I spend. I need to make sure that I'm not wasting time. I don't like repeating myself like over and over again. So that's another thing. It's like kind of do what we need to do and then that's it. Don't need to do more than that. Same old for GME. We talked about it first thing. It kind of had this push up. Does look like it tried to raise the creek. Maybe a smidge. It definitely pushed it a little bit right here today. But ultimately, if it doesn't hold, I'm looking at 2150 to hold the end of this week. And if that doesn't hold, we can be talking about lower lows, but we'll get there tomorrow. Otherwise, I'd like to see it push up and go ahead and make an advancement at 24 and then come back and hold 2310. Don't have any reason to really celebrate the move until we see that kind of confirmation there. Could be as early as tomorrow, but it may take as much time as AMC, which is to say that if we're anticipating something similar, there could be a long-winded chop here for GME. If we're really anticipating, it may not take off until Monday the 21st or something. I mean, there's a lot of time, so it's important to note that as we're evolving in this chart, that will also change GME's timing. But I'm not going to go through that. That'd take too much. Just spent a huge amount of time on AMC, so I'm not going to recap that. A lot of time on IWM, same deal. Still looking at 214, maybe as low as 212, and then we'll see. I didn't spend a lot of time on WTO today. I just don't really have a lot of faith in this stock right now, unless it manages to hold kind of where it's at. And I just get the feeling you're doing like a wraparound widening here, which could break out, but it could also break down and slingshot you to 40 cent. So 40 cent would be the low on an S curve, and they could potentially break out. If it slingshots back to the upside on this widening, and it's just a very mild widening of the spread, you really only have a target of back up here at 53. So in either case, you got to get back above 50s and then hold support here. It's basically the same exact thing. That's the way I'm seeing it right now. It's like maybe there's a potential here that this is widening out and it's going to break, and then you need to see that move. Otherwise, I think down makes more sense. I didn't talk a lot about MPW today. Kind of glanced at it. Same old, same old. Like I mean, it's sort of like the motif that we had was it was going to come down, push up, and then drop again. Based on several things, I think there's a good reason to think it could get down to the 540s. It may end up running with IWM more so than like AMC and GME. It's not like a meme stock in that regard. You may very well see it. I mean, it's crossed up already. It's in a very different position, right? So much like IWM, if it makes that pullback, like if IWM comes back down and checks that creek at 213, if MPW also comes back down and checks the creek at 540, that could be it. I mean, it's very sufficient for the move. I mean, it could just be that's that, and it could just kind of take off as early as this week if it can get down there. It's starting to look more and more like maybe that's not happening. Maybe it's going to be Monday, and we'll see, But certainly if like IWM gap down tomorrow or something and just went real low, it could just build out and just take off. Turnaround Tuesday is a thing, You're a red Monday, the rest of the week could be green. It's very possible. I don't like to speculate too much on that, but the idea that it couldn't possibly go if today's kind of meh doesn't really add up. Like there could be a gap down tomorrow and then it builds out and leaves by the end of the week. So I'm going to kind of fingers crossed on MPW that it goes with IWM. I think it would benefit from the earlier move. I haven't spent a lot of time with it other than that today, so to me that looks about right, but I'm going to just kind of wait. And it needs to break its creek around 6 again, like 620, but it should hit a low first and really retest this macro creek that it jumped. I mean, it's that simple. If it can do that, it's in good shape. And much like IWM, it's got sort of the same trappings. Like there could be it's a similar setup is what I'm trying to say. There could be similar problems with breaking below it or kind of going sideways here if it can't find traction. It's a very similar setup right here. So we'll wait and see. And the other thing I wanted to mention really quick before I take off today is Doge. So I'm in Doge. I got in like right before it took off. I got it in August because someone pointed out to me, and I'm like, I really like this chart. There's a lot of potential here for upside. I got the wrong one. Hang on. That's wrong. That's Bitcoin. Hang on. Wrong chart. Right. So for Doge, I know not everybody's big on a crypto, but yeah, it made some advancements on the weekend. It's kind of retracing right now. That's fine. I'm kind of happy that it's not gone too high too quick because I was expecting if it went all the way up to like 15 or 16, it wouldn't advance very fast. So I'm kind of happy that it's kind of taking its time. It's similar to the others. It kind of looks like it could be a. I mean, frankly, this could be like an M top with a drop after. Once again, maybe going into that 20th. I would like to see it check the creek that it jumped over, and it didn't do that. So for those of you, there was some folks that were like, well, I don't know, maybe I got out of Doge too soon, or did this or that. I'm like, meh. It doesn't really look like it's just gone yet. There's still possibility this needs a retrace and hold a creek here down to like 10 cents. So don't count your chickens before they hatch, right? If we get an early drop and it goes back to like 10 cents and holds, it may be more likely that longer term it doesn't come back down. But then we still got to deal with this 16 cent area. There's a lot going on right here in this little pocket. So there'd be a lot to contend with as we go to the top here. Right? This little pocket right here. So don't hold your breath. Just watch it go. It looks really good. And yes, this has an incredible potential. It seems a little ridiculous to me even. Like, how could it possibly run 11,000% or something? I don't know, you know. But I'd say this. It's done it before. This was 29,000%. Doesn't make any sense. But yeah, I mean, it's done it before. So I'm seeing this as a potentially long build out going into 2026, long term. So I just wanted to mention that because I talked about it on the weekend. So, all right. Appreciate y'all. Hope you guys have a good one. We'll take some time to come stream tomorrow.